Can you guess where I am? I am super excited because we are launching DX100, formerly known as CIO100, and hosted across some incredible venues in Kenya. This year is going to be just the same, if not better. We're super excited to invite you to DX100 this year, and the difference this year is for the first time ever, we are going to be celebrating and awarding people outside of the tech environment for their impact and their influence on digital transformation across multiple industries. Of course, the CIO remains at the heart of digital transformation, and we will be celebrating them in that way. However, this year we'll be celebrating CFOs, CMOs, CEOs, and businesses all the way across Africa, so not just from East Africa. We are so excited to invite you and to launch the DX100 Awards. Put your entries in and we'll see you in November.
Right, help you appreciate Kelly one more time with a round of applause. All right, fantastic. So we want to discuss, our next speaker is going to take us through driving the future of banking through open banking. It's quite an interesting topic. And
can you guess
one thing I'd like to let you know is that he is a senior technology and banking operations leader with proven results in driving transformation, digitizing operations for efficiency, and also seamless customer experience, and a transformative and visionary business leader. He has a track record of helping companies leverage technology to drive real business value. This is a man that I actually respect. Hand on heart, his business acumen. He has an open door policy regardless of his many, many responsibilities. I've also had the privilege of also working closely with him, and I can definitely attest that this is a man who is a strategist par excellence. Ladies and gentlemen, our next speaker is the Group IT and Operations Director at Equity Group Holdings. This is none other than Lanre Bamisebi. Help me appreciate Lanre as he comes to the podium.
Good morning. I hope you can you all hear me? Yes. Okay. I think time is actually, okay. Where is the presentation? Okay. Next. Sorry, let's go through some of the logistics. I just want to make sure my presentation is on before I start. Okay, it's there, but it's not here. All right, thank you very much. I think time actually does make a lot of difference. I've been in Kenya now for like 3 years and 4 months, and my name pronunciation has improved greatly. You know, initially, people murder it. You know, I've been called Lanle, Lamwe, Lando, you know, at some point, once there's hell there, and it also really, you know, sad for me because I work in a bank that has, you know, a lot of Kikuyu people. And I've come to realize that they have problem with L and R, and my name has 5 letters with a L and a R. So the first person that I had to like sit down and educate was the group chief executive officer, James Mwangi. Then it was Polycarp Ngate. You know, I had to like sit them down and say, you know, by the time you guys can call it right, everybody kind of, you know. And today I'm happy that, you know, Hian just called my son name without killing me. And you need to understand one thing about where I come from. Our name speaks a lot about who we are. You know, your name is meant to edify who you are. Like Olarewaju means your words continue to grow. Bamishabi, you know, I will come to that some other time. All right, so I'm here to talk about Can you remind me what the topic is? Open banking. Right, so one of the things that happen when you get to being at executive level is your presentation are obviously made for you by a group of guys. They sit down in the room and they make presentation for you. Then they are meant to have a prep a day before the presentation to tell you this is what's going to happen. But unfortunately, because of my schedule, sometimes I miss those prep. This is one of those times, yeah? So I'm saying this presentation just as you're saying it. Right? So please don't crucify me on that. All right, so I'm talking about, but the good thing is, we're talking about API and open banking. And Ian didn't mention, I'm also the MD for FinServe Africa, and we are one of the sponsors of this event. Can you please give us a good round of applause? All right, so if this thing would move, I will start my presentation. This one is moving, but this one is not. And I've not seen the presentation, so I need to see this stuff. Unless you want to see an African man cry. All right, so talking about open banking, what is open banking? The best way to describe open banking is you have a man who for the past 10 years has been gathering data about his customers, understand their names, their surnames, their numbers, the kind of transaction that they do, everything about those customers. They've been taking it for the past 35 years. I'm talking about banks generally. In fact, for the past 100 years, they've been taking those information, and they have those information in their database. And, you find out that the banks actually have, they actually have most of the information, your banking transaction, the day you open your bank account. They have so much information, even for sometimes they find it difficult to even understand the information that they have. Let me give you how important those data are. There was a scenario that happened, I think it was with Amazon, when they understand the data of this customer well enough to know that once you go to browse on something, they have an idea of what you want to buy. Have you ever seen that thing that happened that you're trying to check up a phone, and the next thing you open on Facebook, and you see phones? Yeah? Does it happen to every one of you? So sometimes they get it right, sometimes they get it wrong. So one of the scenarios where they got it wrong was a man who has a child, 18-year-old girl, and Amazon just popped on the dad's screen that, oh, congratulations, your daughter is going to have a baby. And the man hysterically left work, got home, and called the daughter. Hey, come. Doctor as well. What's happening here? And they realized that she wasn't having a baby. But what had happened was the man was trying to get a gift for someone, so they assumed, because they used the same account, that it was the daughter that was browsing. And because she's a girl, and she's about that age, they assumed that she's looking for, sanitary for kids. Naturally, she's about to have a baby. So sometimes data get it wrong. So now, I'm trying to build a context here about the fact that banks have a lot of data. Now, banks have been sitting on this data for a very long time. And, in the UK, they decided that they need to be open banking, whereby for us to innovate, that data needs to be available to everyone, right? Not just banking data, just inter-sharing of data. Now, open banking basically is running on what we call APIs. So basically what happened is you have a program that is trying to, let's say I want to start a business and I want to do authentication. I want to know that you are who you say you are. So what that means is you have to start by getting every customer's data, right? You can imagine how long it will take you to do that. The banks have been taking that for hundreds of years. So with open banking, all you need to do is integrate with the bank's API, and you'll be able to consume the bank's data. Now, it's good for every one of you, but not so good for the banks. But again, the bank didn't know that the data never belonged to them. It belonged to the customer. So that was a paradigm change. Because it's my data, it's my information, it's my account that I've been running. It's not yours. If I open my bank account today with you, I want those data out of your system, right? That's what we call data privacy. So my presentation today, which I'm seeing for the first time, has introduction, key consideration, developing a launch plan. You see, sometimes when I present this thing, I see the staff that made it. This one I can see Mutoni. I know she's the one that did this. All right, so basically what we're saying is in the introduction, I've talked about the paradigm change. Who actually owns the data? That's the problem here. The data never belonged to the bank in the first place. I'm surprised, I'm an executive with the bank, so I'm here telling you that we don't hold the data belongs to the customers. But for years, we've assumed that we own the data. But with data privacy, we know that we don't. So the customer can tell us how he or she wants to use the data. So that's the first thing. I'm going to talk about the benefits of open banking, which there are enormous benefits. Then, of course, we'll look at some of the disadvantages, like every other thing. I've not seen anything that has an advantage without a disadvantage. Anybody? What? Some people said water. But I remember when I was 7 years old, I had a bet with a friend of mine that I could drink the most water. I was admitted for 4 days in the hospital because I had so much water. I drowned. Do you know you can actually drown drinking water? Yeah, I did as a 6-year-old. So anything, anybody, something that doesn't have a disadvantage. I just thought of one, but I want you to guess. Anybody? Sorry? What? You said life? You said somebody just said life? You're kidding me, right? You know those people that go to places and kill people? They can kill, so that's not. Anybody? I just thought of one now that has no disadvantage, I think. Anybody? If nobody knows, then I might be a genius. Write that down. I just discovered that I'm a genius. Anybody? Give me one disadvantage of the air we breathe. One disadvantage of the air we breathe. Say that again. No, come on. It's not the hair that's packing the jam. The jam attached to the hair, dude. All right, so that's one. So basically, we are going to look at disadvantages of, but thank you very much for that. And what's the name? John. Nice. So then we're going to develop how do you launch an open plan, an open API. And as you continue to discover, like I'm discovering the presentation, we'll continue to go along. The paradigm shift, I already spoke about that. Customers is the owner of the data. And for a very long time, when we sit in banks to develop a solution, guess who sit there? Is the head of product, is the head of technology, and we just assume we understand what the customer wants, right? But the fintech have made us understand that actually it's the customer that determines what they want, right? Sometimes, I'll give you how banks used to work before now. Imagine going to Carrefour, or which other one is there? QuickMart, yes. And you get in, and you take your basket. Then as you're walking in, it's bald. It needs a hair cream. Boom. They put it there. You get that? The way it's walking is as if it's not eating, so they put some meals in your bag, right? Well, his size, it doesn't look like a very tall guy. So they do your shopping on your behalf. You understand what I mean? It's not you going into the shop and picking what you want, right? So what they've done is to provide for you shelves with different things that you can pick. But when you go to a bank, they tell you, open a current account, a savings account, and an investment account. So basically, they are telling you how to run your life. And that's not the way it should work, right? So bankers have discovered that we need to be able to use data to be able to determine. So for example, I'll give you a very good use case. We have people that we call SMEs. You know them? 80% of you, even though you have your day job. But everybody in Kenya is an SME owner, small, medium business. If you don't have a farmer, then you're dead, right? If you don't have a farm, you either have a salon somewhere or you have a nail studio somewhere, but we all have our side hustles, right? right? Who doesn't have a side hustle here? If you don't get one, it's important. So we all have a side hustle. So what happened typically in a bank is you have Mr. Hey, John, who has opened an account when he was 18, and he's been working hard, he's been doing stuff. He has 2 or 3 side hustles. But Mr. John has transited from being an individual to an SME, right? And at some point, he now has like 4 farms, one in Nakuru, you know all those places. Now it's transit from an SME to what? To a corporate, right? You know that information is somewhere, is in the data, right? But unless you mine it, you won't know. If you go to the bank data, you still see Mr. John as an individual, but Mr. John has actually evolved. So that's what banks are doing now, using data to look at the evolution of customers, to be able to place them where they ought to be in the bank. And we've been able to do that. We're doing that. We are in Equity Bank. And some other banks are doing it as well. So paradigm shift 1, new value and models. API-based had made it easy for there to be new different values. Let's backtrack 10 years ago. You want to start a business, a payment business. The first thing you need to get is a server engineer, right? You need to get physical servers, you need to get all those things. But today, you just click onto the cloud, and you want customer data. You get an API to a bank, you get the customer's data, and then the rest is history. So your authentication can be done by the bank, right? So those are some of the new model that is arriving because of this. Now, we want to talk about the benefit of data sharing, which is what open banking is about, is sharing data with yourselves. So one of the benefits is customer experience. We realize now lately customer experience has actually changed. You go to a shop, you can do your shopping, things are happening at the flip of a button. We now use mobile to do almost everything. There is mobile of things. You can use Siri to make conversations. Mobile has disrupted everything. And this is happening because of the evolution of open banking and API. Then increased profitability. I mentioned at the last meeting we had that over $744 million had come into Africa in just about a year from investors in fintech. So that means there's profit in open banking. The other one is aggregation of customer accounts. This I've always had a problem with. If you were to stop a typical person to say, how much do you have? They have X amount in their M-Pesa account. They have some money in their Equity Bank account. They have another set of money in another bank elsewhere. But you see, if you have open banking, you can aggregate all your wealth into a personalized banking and say, this is the total of what I have, and this is the total of my liability. And that's some of the things that you get from aggregation of accounts. And open banking make that very, very possible. The other thing that is not here is, that's the difference between me and the people that present this. I kind of know some of those things. It's things like credit scoring. Right? What is credit scoring? We all sit here, and the problem is people want to lend money to people, right? So the problem is always you lend money to Mokwana, you realize as you're lending him the money, he's marrying another wife. And that typically happens in my country. I don't know about Kenya. Now, so basically what you do with that is you understand the credit scoring of these people based on their behavior. The last time you took money, did they return the money? Right? So based on the credit scoring, you can give people marks and be able to, to say, okay, this person will pay back if you give him money. So you'll be able to give them loans based on that. And that's some of the advantage of sharing data. There are some use cases. N2Wise, a very good use case is what we are doing in FinServe, with the way we are trying to integrate with different organizations to be able to share data with them and be able to do transactions. So, for example, you connect to our API at FinServe, and you have access. So for example, you're a merchant. You're just setting up a merchant business, and the first thing you want to do is you want people to be able to make payment to you in whichever way they want, whether it's cards, whether it's links, however they want to do it. But now, imagine if you as the merchant, you have to engage all the banks. to get connection to them. So that means there's a lot of integration you have to do. And for these integrations, there's a lot of cost to it. So we can come up to the Finstaff, for example, API, and you already have access to all the banks. So those are some of the use cases. The other one is Cash App, futuristic use. I'll give you an example. We have instances where we give people loan in the bank, and the loan is sitting on their collateral, right? Collateral is what you use to get a loan. So let's assume, for the sake of it, we had borrowed a company, a group money in a particular place in Kenya, and that's where they have all their farms and their properties. And that place, there is, an upsurge of war or something going on there. Obviously, the value of a house, if somebody were to tell you today that, oh, by the way, there's a mansion in Ukraine, and it's $20,000, how eager will you be to buy it? Probably not. But if that has happened 6 months ago, or maybe like a year ago, you will have jumped on it, right? They never knew the war was coming, but the war is there. So, but the information about the war has been coming all along. People have been reading newspapers. Now, if you have a very good system that can take all this information, you'll be able to know that this place, the collateral might be decreased. Am I making sense here? All right, so those are some of the use cases then, of course, we have instances where I wear this smart wearable, where insurance company now will say they can reduce your premium if they realize that on a regular basis you're doing the right thing. You're exercising, you're not smoking, you're not drinking. So based on that, they can see how they can reduce your premium as against somebody who doesn't do any exercise. Because the theory is, unless you get into an accident or a plane crash, if you live well, you will live long, right? Okay, I think I have, how many more minutes? 2 minutes. All right, so I'll try to round up. Disadvantages, of course, detached connection. As we grow and it's everywhere around us. Because of open banking, because of technology, we are disconnected, right? It's areas like this that make us to see one another. I've seen people here that worked with me in equity or FinCell I have not seen in 3 years, right? That's how disconnected we are as a people. So all these things are making us disconnected more and more. You see, somebody's birthday is on Facebook, and people are celebrating that, but the guy is actually somewhere, lonely somewhere, hoping that he meets friends. So we are all disconnected because of all this connectivity. The other one is cybersecurity, which I won't go too much into. Then there is third-party risk. So, for example, a small fintech in Uganda connected to a couple of banks in Uganda, and that cost the whole economy of Uganda about $4 million. Because that fintech, it's almost like you're riding on a giant, but you yourself, you don't have the risk, the prerequisite security to make sure that you can withstand it. So once you connect, you take the risk of all the fintech that you connect to. And some potential use cases, I've already mentioned risk, financial product aggregation, non-product aggregation, real-time NPL management, I mentioned that. You can know a loan that is not performing by looking at the transaction that they do. And the other one is some of the key consideration. If you're trying to some potential use cases, I've already mentioned risk, financial product aggregation, non-product aggregation, real-time NPL management. I mentioned that. You can know a loan that is not performing by looking at the transaction that they do. And the other one is some of the key consideration. If you're trying to some potential use. There's a lot of money for the bank because the bank can sell the APIs. And the fintech can also use the API to generate revenue. Oh, yeah. Ooh. Thank you very much.
Larry, thank you so much. That was a fantastic. I hope I said that right. Can you guess where I am? I am super excited because we are launching DX100, formerly known as CIO 100, and hosted across some incredible venues in Kenya. This year is going to be just the same, if not better. We're super excited to invite you to DX100 this year, and the difference this year is for the first time ever, we are going to be celebrating and awarding people outside of the tech environment for their impact and their influence on digital transformation across multiple industries. Of course, the CIO remains at the heart of digital transformation, and we will be celebrating them in that way. However, this year we'll be celebrating CFOs, CMOs, CEOs, and businesses all the way across Africa, so not just from East Africa. We are so excited to invite you and to launch the DX100 Awards. Put your entries in and we'll see you in November. Can you guess where I am? I am super excited because we are launching DX100, formerly known Learning Center as well. Again, thank you all to all of you for participating and making today possible. Please can we just have a round of applause for the sponsors. Now, it is my great honor and privilege to welcome the next speaker to the stage. With extensive ICT experience, not only in his existing role, but also with National Treasury and on the board of the Information Communications Authority. But not only with experience, with a highly educated background with a Masters of Information Engineering and depth both from an educational perspective and experience. I think this individual brings an incredible value not only to the Kenyan government, but to the fintech industry, to the ICT industry, and innovation industry as a whole. So it was with humble thanks I invite Mr. Jerome Ochieng, the Principal Secretary of the State Department of ICT and Innovation, part of the Ministry of ICT, Innovation and Youth Affairs, sorry. Please welcome Jerome to the stage.
Thank you
Thank you very much, Kelly. I hope this, good. Thank you very much, Kelly, for those great words. Let me start by really appreciating Kelly Bentley, the Chief Executive Officer of the DX5, my friend Hari Hare, Chairman and Content Director, DX5, Landre from Equity Bank, distinguished guests, ladies and gentlemen, good morning. Good morning again. Good. I'm indeed delighted to be part of this event today that marks the first day of the African Fintech Summit. Let me congratulate DX5, formerly known as CIO Africa, for hosting this summit, which brings together the financial industry players with the ICT players. We all agree that the rise of fintech has been a dominant force in the recent years, and it is only getting stronger. Kenya is one of the leading financial and tech hubs in Africa and has been a driving force in financial inclusion, with the country's biggest achievement being mobile money transfer. Forums like this will motivate traditional banks to adopt new innovative ways in their businesses model to survive the disruption that the new tech is causing. I would also like to encourage financial institutions to take advantage of the technological advances made in the country as well as in the larger East African region to create innovative products that contribute to improved and efficient business environments, increased accessibility, connectedness, and better standards of living. Ladies and gentlemen, fintech is a $500 billion industry that is growing rapidly. Analysts predict that the industry will grow to $10 trillion by the year 2025, which is only 3 years away, with mobile money underwriting much of this expansion. By providing a convenient platform for sending and receiving money and short-term credits, mobile money has become a key mechanism for poverty reduction in Kenya. The value of mobile transfer has also increased drastically. Banks can take one of two approaches to fintech disruption. One, they can either ignore it or they can embrace it and learn how to use it to their advantage. There are a number of things that banks should focus on to ensure that they are not left behind in the fintech world. Customer experience. When we look at customer experience, banks need to focus on improving their customer experience through digital channels, mobile apps, and bots. Customers want quick access without having to wait on hold or waste time navigating complex menus. There's also the element of customer data and analytics. Banks should also invest in building up their customer data assets so that they can better understand where customers spend their time online, what information is important for them, who their influencers are, both online and offline, which services they value most highly. This will provide banks better insights into customer behavior, which then allow them to make better decisions about where investments should be made moving forward. The rise of fintech has been nothing short of revolutionary. It has changed the way we think about money and banking, and has also forced traditional banks to rethink their strategies. But even with all these changes, there is still much room for growth in the fintech space, and it seems like each year brings new innovation that will further disrupt our financial systems the way we know them today. At this moment, let me pause and ask you to join me in appreciating the role His Excellency the President played yesterday by refusing to assent to the ICT Practitioner Bill. As a ministry, we passed our concern that the bill was going to stifle innovation. The bill was going to be a problem to the ICT practitioner and the entire ICT ecosystem. And again, we thank His Excellency the President for not assenting to that bill. Ladies and gentlemen, admittedly, Kenya's emergence as a technology giant in the continent owes it to the government's deliberate focus on developing policies, legal and regulatory frameworks, and institutional reforms aimed at improving the universal access to ICT services, building capacity within the ICT sector to facilitate growth of the digital economy, the e-government services, also together with regional integration. Let me also mention that data protection and cybersecurity threats remain a factor in fintech. The government enacted the 2018 Computer Misuse and Cyber Crime Act, which covers the protection of critical infrastructure, as well as issues related to mobile money, cyber attacks, blockchain, and cryptocurrency. Also, the Data Protection Act of 2019, which was also enacted to fill the significant gap in the digital trust environment in Kenya. Guided by the Vision 2030, the Cabinet Secretary, Ministry of ICT, Innovation and Youth Affairs, launched the National Digital Master Plan during the Connected Summit in April this year, whose objective was to reduce the digital gap. This document is largely informed by the National ICT Policy of 2019, which now guiding how ICT as a foundation is creating a robust economy, thus improving the livelihood of Kenyans. The government has continued to guide the ICT sector, and Kenya has gained global recognition for innovation and increased ICT infrastructure through the expansion of the national fiber optic backbone infrastructure that now covers almost every part of this country. As I conclude, I would like to state that digital transformation is no longer just an agenda for the Ministry of ICT. It needs both the government and private sector efforts in achieving its purpose. The big payoff is through adoption of digital technologies across every sector of the economy. Let me also still emphasize that as government, we will continue to facilitate and to work together with the private sector in making sure that we have a conducive ICT ecosystem. I wish you fruitful deliberations during this conference, and let me take this opportunity to thank you very much. I thank you. All right.
Known as CIO 100 and hosted across some incredible venues in Kenya. This year is going to be just the same, if not better. We're super excited to invite you to DX100 this year, and the difference this year is for the first time ever, we are going to be celebrating and awarding people outside of the tech environment for their impact and their influence on digital transformation across multiple industries. Of course, the CIO remains at the heart of digital transformation, and we will be celebrating them in that way. However, this year we'll be celebrating CFOs, CMOs, CEOs, and businesses all the way across Africa, so not just from East Africa. We are so excited to invite you and to launch the DX100 Awards. Put your entries in, and we'll see you in November.
Yep.
Right, fantastic. Thank you so much, Mr. Jerram Ochieng, Principal Secretary, Ministry of ICT, Innovation and Youth Affairs. Help me appreciate Jerome once more with a round of applause. We also like to appreciate Alanri Bemisembi. He is the Director IT and Operations at Equity Holdings and also the Managing Director at FinSouth. Thank you so much for taking us through that. Help me appreciate him one more time. And for opening the floor for us this morning, very, very well, articulately, the CEO at DX5, the ever so lovely Kelly Bentley. Help me appreciate Kelly one more time. I'm always fascinated with your name, Kelly Bentley. You know, I'm inspired that one day when I get that lovely daughter of mine, I will call her Wanjiro Posh Cayenne. All right, so let's all rise to our feet. Let's all rise to our feet. We want to have a 10 minutes tea break, exactly 10 minutes. So now it's 11:20. We need to be back here at 11:30. Just high five the person standing next to you and tell them tea and snacks is on Hari Hare. It's his birthday. He has ensured that there are going to be pastries out there. Exactly 10 minutes. Tea is on Hari. Thank you so much. Enjoy your tea break and see you at exactly 11:30. Thank you so much. See you then. 10 minutes.
Can you guess where I am? I am super excited because we are launching DX100, formerly known as CIO 100, and hosted across some incredible venues in Kenya. This year is going to be just the same, if not better. We're super excited to invite you to DX100 this year, and the difference this year is for the first time ever, we are going to be celebrating and awarding people outside of the tech environment for their impact and their influence on digital transformation across multiple industries. Of course, the CIO remains at the heart of digital transformation, and we will be celebrating them in that way. However, this year we'll be celebrating CFOs, CMOs, CEOs, and businesses all the way across Africa, so not just from East Africa. We are so excited to invite you and to launch the DX100 Awards. Put your entries in and we'll see you in November.
To discuss when does regulation become an opportunity. Interesting discussion, and to moderate this session is a man who practices and also focuses on various aspects, including mergers, acquisitions in his field, projects, capital markets, and corporate governance. He also leverages on his advisory experience on IP, TMT clients, on regulation, compliance, and corporate matters touching on fintech and payments. Also touches on internet, e-commerce, telecoms, infrastructure, and data protection. This is a man who is well versed to handle this particular session, and he is the corporate and commercial lawyer at Triple OK Law Advocates. Ladies and gentlemen, it's my proud honor and privilege to help to introduce our moderator. This is none other than Frank Raudo. Where is Frank? Help me appreciate him with a round of applause. Thank you so much, Frank. Over to you as you moderate this session and you take us forward. Thank you.
Thank you for that. Can you hear me? Yes. Thank you for that warm welcome. To the stage, I'd like to introduce my fellow panelists. Munyi Ndinga is the Secretary of the Association of Fintech in Kenya. So please, Munyi, join me on the stage. I'd also like to introduce Caroline Nguya. Caroline Nguya is an IP and tech lawyer practicing at KO Associates. So Caroline, please join me to the stage as well. I'd like to introduce Kevin Mutiso to the stage. Kevin is the secretary or the chairman of the Digital Lenders Association of Kenya. So Kevin, please. And finally to the stage, I'd like to introduce Carol Kokilei. Carol is the manager of the legal advisory services at PwC. So Caroline. Thank you, fellow panelists. It is indeed a pleasure to be joined by distinguished seniors in your profession from both legal and business advisory ends. And perhaps just building cadence with the theme of the summit, right? Looking at the Pan-African aspect of fintech, right? My first question to the panelists, right, and a bit controversial would be, do you see a space or a need to have a Pan-African or an African-wide regulatory regime for the fintech space, right? I'd just like to maybe pick your thoughts on that as well. Perhaps you can start with Caroline.
Thank you so much, Frank, and good morning, everybody. It's really a pleasure to be here today. To your question, straight to that, Pan-African platform, absolutely, there is room for that. I think we all know, well, we all tech is here, we know that tech is borderless, right? We all have the cross-border applications, and even if you're not practicing them at the moment, they are sitting there latently. So really the issue that we have as tech providers is then we have to go across all these jurisdictions to get approvals. So dealing with several regulators across multiple jurisdictions is really a big challenge. And also for regulators as well, having then to deal with enforcement issues and conflict of law issues across jurisdiction is really such a huge challenge. So then therein comes the regional agreements. I think a good example is the Africa Continental Free Trade Area, which, as we all know, is something that is quite active and has taken quite, a big space in driving a single market framework across Africa. I think it's really a very novel thing, but the challenge that we're having across jurisdictions, not just in Africa, but across the world, is really the issue of the possessiveness of sovereignty that a lot of countries have. They don't want to let go of that sovereignty. So it then becomes a challenge to have a harmonized regulatory framework. So what really is happening in practice is some kind of regulatory coordination where you have countries implementing their domestic laws, but then coordinating across jurisdictions. So, at the end of the day, what it boils down to is collaboration. Practically what we can do as an African continent and even globally is then to ensure that we take advantage of collaborative forums like this summit, for instance, the festivals, the tech festivals, the, just forums that to, ensure we come together as a global and even Africa-wide ecosystem of fintechs.
Yeah. Thank you so much. Perhaps pivoting off from what she said, Kevin, you're an evangelist of fintechs in Kenya, right? Perhaps, how do you see this space and how do you see an opportunity here to canvass African-wide regulatory regimes, perhaps from our business perspective as well?
Thank you very much. I'm very happy to be here. I echo your sentiments, Caroline. I think the answer is yes. We should have an Africa framework. I think the opportunity through the ACFTA is a good one. I think what I can add to the conversation is, let's start by focusing on what lowest hanging fruit. One of the big challenges we have in fintech is identity, for example. How do we do KYC checks digitally? How do we confirm that Kevin Mutiso is actually Kevin Mutiso? How do we get Kevin Mutiso's credit scoring data from Uganda into Kenya and make it relevant? And what are the policies or what are the ideas that need to be around that so that we can make those two solutions, for example, scalable, and the rest will follow. This morning we also talked about switching, you know. In fintech, there's a lot of disbursements, there's receiving, there's settlement, right? If we could also have a unified approach to solving for that, I feel like that would go a long way as we solve the other aspects of policy and that Africa-wide approach.
Thank you so much. Perhaps Nunyi and Caroline, do you have any contrary opinions to those postulations?
Good morning, everyone. I ideally would not say I have any contrary opinion to what my predecessor speakers have said. However, we can also pick up this conversation from the sectoral perspective. As Caroline has mentioned, that the main challenges that are perceived with the implementation of a regional framework for facilitating or creating a conducive environment, especially for FDIs and business interrelations amongst African countries, is the need to maintain sovereignty. And the fact that even within our regions, for example, in East Africa region, we already have our trade agreements and consensus on how we intend to do our businesses. But you realize that moving away or migrating into the broader regional or umbrella apex of the Africa Trade Agreement becomes a challenge. So even as fintech service providers, as we're seated here, I think this is an opportunity for us to pick up the conversation based on sectoral reforms or sectoral policies that we would then take as recommendations to the umbrella body, which would then facilitate this entire process of ensuring that the trade barriers and tariffs and all that hindrances to the business environment are gradually dealt with, or we gradually move along with them.
Thank you so much. Perhaps moving on to the next question, yeah. I think the elephant in the room, or lack thereof, because we don't have a regulator in this panel, is we see regulation always trying to catch up with technology, right? Which becomes an almost impossible task, right? Giving the example of Kenya, we do see some regulators taking the aspect of regulatory sandboxes, right? However, mostly in the fintech space, there's still an opportunity there, right, from a regulation perspective. How do you perceive those ideas, and how do you perceive those perhaps postulations with regard to regulators' approach to having an innovative pathway for fintechs to actually take in that space?
If I may,
you can go ahead, yeah.
Okay. I think I'll take it. I guess the mic is on me. So, I mean, with regards to the sandbox approach of regulation, we all appreciate here that we are in different forms of businesses. There could be the banking businesses, we could be in the business of insurance, we could be in the digital lending business. So we appreciate that the regulatory framework, especially speaking from the Kenyan environment, is diverse and is mostly very cut out to meet particular market needs depending on the sector. So, I mean, fintechs are deliberating the approach of having one sandbox or a sort of group group approach to regulation would then mean that there's a lot of collaboration from the different industry or service providers. So it's in my opinion, it would be something that would be workable, but in the very, very, very long-term perspective, because marrying the objectives of the different industry players and the regulatory framework, for example, for CBK, it's a whole different set of regulations for insurance companies and for the banking sector, even though the intended objectives will be the same. But then again, if I may add, some of these regulations are really a repetition of what is already there. For example, the CBK regulations for digital lenders provides for issues of consumer protection, data protection, and other compliance or reporting mechanisms that are already embedded in other laws. For example, we have the Consumer Protection Act, we have the Data Protection Act, we have the Banking Act, and all of these are already embedded in the existing laws. So it is a conversation that we can always pick up to see if we can come to a common point of convergence.
Thank you. Perhaps, Munyi, you're an active player in the market, right?
Yep.
So is there a fostered approach from all fintech players, perhaps to explore sandboxes, right, with the regulators, right, of like a fostered collaboration efforts, right? And perhaps you can give your thoughts on that and your practical experiences with those approaches as well.
Thank you. I'd like to look at it from both extremes. So one is what she's quite articulated well, because there's already existing regulation and policies around different industries. And at times we need to accept what is actually already hard-coded and not spend too much time trying to change what is hard-coded, but look at what opportunities are there in the market. So today we've got regulation that exists in banking, insurance, and any other financial services sector. But on this other hand, you've got an industry that is actually leveraging on technology to start now breaking all these barriers. So at times what happens is we spend a lot of time trying to change the regulation as opposed to look at what are the opportunities that these new technologies, these new collaborations can give us. And I'd like to give an example of how are we able to embed regulation in coding, for example. For those that actually do a lot of dev work, many years ago you already started embedding security in product development. So the challenge to us is how do we embed regulation in product development as well. So once you do that, then it means then that you take many aspects of what is already hard-coded in regulation and start putting it in the products that we develop. And when you look at even the challenges that the fintech community is facing, especially the startup sector, is them not being able to understand or relate with the regulations that actually govern what they do. So, but if this then starts being part of your software development cycle, part of your platform development, it then means then that it's more of a collaborative approach between the industry and the regulators in trying to make sure that, yes, we achieve a platform that allows everybody to participate, but at the same time as well, being able to satisfy the regulation requirements of a certain market.
I think, Kevin and Carol, you deal with both sides of the landscape, that is the business-facing side and the regulators as it were. Perhaps I'd like to maybe understand your pain points when you're dealing with the regulators, right? And also what your clients actually ask, right? What do our clients ask with regard to these pain points, and how do you navigate those pitfalls or potential pitfalls as well?
Yeah, sure. I think to the point on the sandboxes, we have sandboxes, in a large number of jurisdictions. The challenge that we're having is that some regulators don't have the sandboxes, or you have a situation where you've got a product that cuts across different subsectors, and so the question is, where do you go? Because there are all these regulators with their individual sandboxes. So the idea of a consolidated sandbox at the end of the day is really a good thing. Maybe I can give an example of the UK. They have the FCA regulated single sandbox, which has worked quite well in kind of ensuring that the regulator is able to easily identify the things that cut across your product and ensure that they are dealt with within that sandbox. You know, as Munia said, you know, we don't have to like sort of do a total upheaval of the systems that we currently have. But what we can do then as regulators is come together and sort of create a framework that ensures that we have a single sandbox that cuts across all the products. Yeah.
Kevin, your thoughts on that?
I mean, the sandbox method has definitely shown that it is the better way. My take on this is what we need to focus on, you know, echoing what Muni was saying, is how can we make it easier for the regulators to catch up? So I'm actually of the opinion that regulators should not be ahead of the technology, because their mandate is very simple. It's market conduct and stability of the market. What we need to create is a framework where we as businesses can engage the regulator in a way that doesn't undermine that mandate that they have, right? And that's where the sandbox idea is a great one. What we also need to then focus on is how do we streamline some of the existing processes that exist in the different regulatory frameworks. For example, fit and proper. If I do fit and proper at CBK, should I do fit and proper at Bank of Uganda, you know, Bank of Ghana, Bank of Nigeria? I think that should be standardized across the continent and across the region, so that it's easier for the fintechs to engage the marketplace, but without disrupting the mandate of the regulator. So that's sort of the way I think about this.
And perhaps just in that regard, then how do you navigate the multi-sectoral challenges as a fintech that you have? Let's say you have to comply with the consumer protection authorities, data protection authorities. Of course, it does become a huge compliance cost on your business. So how do you navigate that as well?
In fact, one of the arguments I've made is the reason tier 3 banks and microfinance banks have failed in this country is the cost of compliance is just too high. If you don't have a certain size of balance sheet, the cost of compliance is going to kill you alone, you know, before you pay salaries and rent. So to your point, what we need to do is figure out how do we streamline what needs to be streamlined. So the easy stuff, and I've already given one, fit and proper, right? If I'm able to be a director of a bank, I should be able to be a director of an insurance company or a subsidiary of my bank in Uganda. So we need to focus on how do we make the cost of compliance easier, and how do we make the regulators see the value of that to them, because there's also a capacity issue. One of the biggest challenges, and Muni can confirm this when we were negotiating the DCP, was is there capacity at CBK to license 100+ lenders when they've only licensed 43 banks, 14 MFIs, 17 remittance platforms. We are the biggest constituency now, right? Now, if it's going to take 2 years to get a license, that will genuinely affect how the operations of the business will be. So my take on this thing is the laws we have could be good enough for what we have, but what we need to focus on is how do we streamline some of the processes so that it's efficient for both parties.
Yeah, perhaps to Muni, of course, a regulator will come and say that, look, we need to look after market conduct. We need to protect consumers, right? So how do you achieve that balance between innovation and regulation? I think there's an opportunity here to be explored, but how do you do that from a practical perspective as well?
Yeah, traditionally, what the tech industry has been doing is, flying far away from regulation, flying far away from the sun so you don't get burnt. Mm-hmm. And I think, that era is gone. And as we build, as we as entrepreneurs try and solve challenges in this market, we must also understand what it is that the regulator is trying to do. Mm-hmm. Because at the center of it is a customer. So the innovator, the entrepreneur sees a customer, the regulator sees a citizen. And we are all aiming to achieve the same thing. Mm-hmm. So then the question is, how often are we interfacing with the regulator, for example? Mm-hmm. And more often than not, you find that we are only interfacing either when you're renewing your license or when there's a letter that has come in that's sort of giving you a warning and you have to explain yourself. But we never actually connect and ask the regulator, how do you see yourself regulating our space in the next 5 to 10 years? What are the challenges that you're seeing that are possibly going to emerge within the space that you're operating in? So even as we innovate, we can also innovate for regulation, for example. So in a sense that if there is a way that, for example, the regulator is doing it manually, like what Kevin is asking, how do you regulate 300 digital lenders, for example? Is there a way that the digital lending business community by itself could actually build a platform that makes it easier for CBK to actually peep into and see whatever it is that they're doing and they feel comfortable? So for me, I think it's meeting each other halfway. As innovators and entrepreneurs, we can no longer continue flying too far away from regulation. It's not going anywhere. So I think there's an opportunity for us to meet halfway and also for the regulators to listen. And this is to all of us, because what I've seen happening a lot is the noise comes after the regulation has been passed. I know we clapped after the president refused to assent to the ICT practitioners bill. But I can tell you, if we did a quick poll right now, who has read that bill, I'll tell you, less than 10% of the guys in this room have read that bill, and it affects their daily bread. Yeah. Funny thing. So I think also the active public citizen participation in the process of legislation and in the process of creating these regulations goes a long way in actually inputting the things that we want to see in terms of regulation.
Thank you. Perhaps you can test the audience's appetite towards regulation by taking a couple of questions. Let's see who has actually read the ICT bill in that regard. So we'll be glad to take questions from the audience. Any questions? If there are none, maybe perhaps I'd like to swing these questions to both the legal advisors in the room. Do you see an opportunity here for RegTech, right, in terms of what Muni has just said, right? There's a huge opening here for both lawyers, non-lawyers, fintech players, technology players, right? Do you see an opening for that gap in the market?
Yeah, absolutely. There's definitely room for RegTech, SupTech as well. And I'd just like to pick a point on what Kevin had alluded to earlier as regards to upskilling of regulators. Really, really important for them to embrace SupTech, so that even as they're interacting with the various fintech providers, they come from a place of deep understanding of how it is that technology can change the way that we are doing things. This then gives them, a nice platform for them to interact in a very open way and to sort of look at these new technologies, not from a point of bias where we are coming from, a place like digital lenders. We had this kind of negative press and perception that there were these rogue digital lenders who were engaging in unsavory practices, but you're coming from a place where you're testing these products, from just purely their merits, and so upskilling the regulator is really a key thing. I also just want to touch on national policy, which I think is quite important. It's really important for us to have some sort of integrated national policy across jurisdiction that touches on purely fintech. I know, like in Kenya at the moment, we do have an ICT policy, we have payments strategy policy, but we do not have some sort of standard fintech policy that then articulates the government's view of fintech. What is fintech? Demystifying what it is. What are the roles and obligations of the various players within the industry, and then that certainly will give a good platform so that we know if I have this product, this is where I need to go. Yeah, there's a fintech office, this is where I can go. It's a one-stop shop. I can receive the services I need and get direction on the way forward.
Thank you. Perhaps as this wrap up, parting shots, Kevin, Caroline, Munyi, Carol.
Well, my parting shot is maybe I should talk about the experience so far. So the digital credit provider law regulations that are due by September 17th gave us a lot of insight into how to engage government as an ICT sector. And so I think for those of us in the room, I think maybe let me share 3 or 4 deep insights. So the first insight was government is a huge machine that has several actors in it, and understanding the different actors is important because they each have very important roles they play and may have antagonistic relationships. So do not assume because the finance committee at Parliament is in charge of money bills that they're working hand in hand with Treasury or they're working hand in hand with CBK. That may not be the case. So assuming that that is so makes you approach the problem statement in a wrong way. So that's the first insight. The second insight is that this notion that there's an antagonistic relationship between government and industry is also wrong. Government usually just wants to understand, well, I'm over-exaggerating usually, but if you find the right people to talk to within that ecosystem, they usually just want to understand what you do, how you do it, because they're not business people. And that comes to my third insight. When you talk to economists at CBK Treasury, they've been there since they were 24 years old, right? And today the guy is 40, 50, just hitting about retirement age. And the most usually they've done is a side hustle that is not even fintech or ICT or innovation driven. So their understanding of business is very old school. So it's zero-sum games. They expect you to, they're thinking you guys just don't want to pay taxes, blah, blah, blah. So that understanding of who you're talking to is not, that they're not business people, just allows you to approach them with a little bit more empathy. And then finally, PR, right? Public opinion shapes policy in many ways. We were being hammered by the central bank on almost a daily basis. I woke up one day and the central bank governor had said digital lenders are like fleas, right? How can he say that when we impact 4 million customers on a daily basis? So yes, we're lending 4,000 shillings, which is nothing compared to what the banks are doing, but we're impacting several people in his ecosystem. So the public opinion shaping that we did over the last 2 years, where you saw adverts, PR campaigns from the digital lenders, the invention of the word rogue lender so that there's a differentiation between the two sides of the market, has really helped us get a seat at the table. And so I know Kenyans, we are very shy. I don't know why we are this shy. When you go to Nigeria, US, they're not as shy as we are. But don't fear coming on stage if you're a policy expert or an expert of any kind, where you can lend your voice to achieving a much bigger objective for the betterment of the ecosystem.
Thank you, Kevin. Perhaps we have a few seconds. Caroline, then Munyi, and final Carol.
There's so much to say and very minimal time. So, as a parting shot, or my last words would be, is regulation an opportunity for fintech service providers? Yes, it is. It depends on how you look at it. Regulation promotes competitiveness. Regulations fosters integrity in the market players. Regulation fosters trust, builds collaboration with the governments and the regulators in place. And do you have a chance as industry players to shape regulation in the way in which you want it to be, for it to be very business friendly and accommodate the business interests of the various players? Yes, that is why we have industry associations, as some of you are here. So what we need to do is adopt a very strategic policy initiative to direct the industry needs to the service provider, while still appreciating that the regulator is here to stay. So you find a way to suit it in a way that fits your business interests and also comply with the regulator or the laws in place.
Thank you so much. Munyi, Carol.
Quickly, 6 weeks ago, under the umbrella of the Fintech Association of Kenya, we did have a meeting with the central bank governor. And just two things came to mind of what he said is, one, standards. how can we collaborate in creating standards within the fintech industry? That was a challenge that was thrown to us. And then the other one is impact. The challenge that we're having today is we've got a lot of announcements about how much has been invested in fintechs, but we're not having a conversation about how much impact the fintechs are having in the economy in terms of transforming different industries. And this is one of the ways that you start connecting with government when you start speaking to impact and the things that you're actually doing in the market. So for me, I think standards and impact things are a challenge to us to be able to address that.
Thank you. Finally, Carol.
Yeah, thanks. Just quickly, we have a huge unemployment gap in Africa. Fintech is going to be really important for us to bridge that gap as well as promote financial inclusion. So it really is incumbent on us as an ecosystem of fintechs, regulators working together with the fintech players to collaboratively come up with ways to reduce the market entry barriers that are currently existing.
Thank you. I think, in perspective, so streamline collaboration, Pan-African integrity, and also, impact as well. So I think that's a partnership for our four panelists. I'd like to thank Carol, Muni, Caroline, and Kevin, and very elaborate and shared perspectives in this discussion. So thank you so much. And to the audience as well, thank you for your time and for listening to us. So thank you as well.
All right, help me appreciate Frank and the panel one more time with a round of applause. Thank you so much for that insightful session. I like what Kevin said about us being a little bit shy as compared to our West African brothers. Having been in the sales field, whenever I can call one of the clients, if I call Stanley from Equity, I have to check up on him. How is he doing? Is it a good time? Can we talk? But if I was to do a cold calling to West Africa, the first thing they will ask you, how did you get my number? Get straight into it. So they'll definitely bring that urgency out of there. So thank you for that. It just came into mind. All right, fantastic. So we want to discuss about the fintech, the Africa landscape when it comes to fintech. And to take us through this, he is a gentleman who has years of experience in the technology sector, 11 of which have been in the digital payment space across 11 markets in Africa. Prior to joining the Association of Fintechs in Kenya, he founded Co-Design Africa, a fintech startup focused on digital payments and lending in Kenya. I have also been a beneficiary of his strategic plans, the ones that he laid down in Access Kenya. We were able to benefit to that. My peers have always told me about the strategic leadership he had at Cellulant, and now he has recently joined Tala as the general manager. Ladies and gentlemen, help me appreciate the one and only Muni Ntiga as he comes forward to take us through the session. Thank you. Asante sana. Welcome, Muni.
Afternoon, guys. So the presentation says Ali Hussein, so I'm not Ali Hussein. Ali Hussein is my chairman at the Fintech Association. So what happened is this morning at 5 a.m., Ali called me. He was not feeling well. As you well know, there's a cold bug that is going around, which put him down last night. So he called me at 5 and told me, hey, you need to step in. So this is Ali's presentation. And I'm not using Landry's line, but at least I'm doing better than him. You don't get to do a presentation done by your chairman. So I will do Ali's presentation, but I'll also speak to it. So today you have the chance to get 2 presentations for the price of 1. So let's do this. We'll start with, okay, tech issues. Sorry, can you try sort me out here? So the import of this presentation is actually just to create the nexus between what we're doing in Kenya as a Fintech Association of Kenya and the Africa Fintech Network. So back in 2018, Ali and I were attending a conference in Kampala, Uganda, and which was being hosted by, they call it FITSPAC, Fintech Technology Service Providers of Uganda, FITSPAC, yeah. And Segu Naina, who is the president of the Africa Fintech Network, gave us a challenge and said, hey, you guys, Kenya is like, tech central. You're the guys who are doing amazing stuff, but here you are, not part of AFN, not hosting Africa in a summit like this, and he challenged us to go back home and try and figure out how we can be able to bring the fintech community together. And we started doing that early last year with a group of fintech leaders in the market, and we set up the Association of Fintechs in Kenya, which gladly to report that 1 year later, thanks to government bureaucracy, 1 year later, got registered by the government, and then it's therefore then a legal entity in Kenya today with more than 77 fintech companies as members. And we signed an MOU with the Africa Fintech Network. So we are part of the Africa Fintech Network as it is today. And what we're trying to do is we're trying to see how can we be able to collaborate across the continent, leverage on the knowledge that is being shared, the products that are being built, and also how do we better interact with the regulators, with government, with the corporate bodies, and we'll see some of the members that are part of the Africa Fintech Network. So on the fintech landscape, I will not dwell too much on that because most of you have read many presentations, you've looked at data, you've looked at a lot of white papers that have been written by various organizations. So I will not spend so much time on the landscape. I will only speak to some of the slides that you put in there and just put in my own words around that. So we start with the notable fintechs. You all know them. Some are Kenyan. Most of them are Nigerian. Yeah, somebody said Kenyans are polite. I'll give you a very short story for like 45 seconds. So as the Association of Fintechs in Kenya, we were invited to London in April, and we had this morning breakfast event. So we were 6 guys from Kenya. And when we walked into that room, so let's say the room had 100 guys. So when we walked into that room, 6 were Kenyan, 3 were British, the rest were Nigerian. And that's not even the point. The point is they had 2 cabinet ministers in that room coming to listen to what the African fintech community is doing and trying to see how their government can support that. So there's the aspect of us, you and I, what are we doing about it? But also there's the aspect of our government actually getting interested in the conversations that are going on. And this is us flying all the way to London and finding them there, having taken over, and their government interested in those conversations. So it's just a challenge to us. So what Kevin said, it's something that we need to think through. I spoke about how much money, fintechs are raising in Africa, and the numbers look good. But the numbers are better when they tell you a story. So you get $4.9 billion coming into Africa, and that's a good story. But we're not hearing the other side of the story, which is what I spoke about, the challenge that the central bank governor gave us, is what is the story after this? So for me, this looks good. But when that money comes in, what do we do with it? What impact are we creating in Africa, in Kenya, in the various industries? We look at industries like agriculture, $32 billion a year, 32%, sorry, of the GDP in Kenya. 94% of agri transactions are still run in cash. So what is the fintech community doing around that space? Today, we import $2 billion worth of what we call, basic food, maize, wheat, rice, into Kenya. That is capital outflows into Kenya, $2 billion. The government spends $2 billion yearly importing this food, and it's food that we can grow here. It speaks to the broken agricultural value chain that fintech community can be able to solve for, the things that people like Twiga are trying to fix. So for me, this slide gives me more questions than a pretty story. It actually asked me, after we get $5 billion, what are we doing with it? In which industries can we point and say this was transformational because of the investment that we got in the country? So for me, more questions than answers. The Unicorn Club, we all know them. I'm an ex-Cellulanter by blood, by heart. I will hope one day I'll see Cellulant in this list. That was a dream that we started many years ago, and I believe they're still on the path to achieving that. But more importantly, I can at least attest that we did have real case studies of things that we did in markets that impacted communities and the lives of people directly, and we could actually account for it. Cool. So as we move, we've heard about PAPs, and in the CEO breakfast in the morning, we sort of touched into it, is how are we able to easily move money around? We've got challenges. One of the biggest challenges we have in the African payment space is the fragmentation in terms of regulation, fragmentation in terms of movement of money. When I was at Cellular, one of the biggest challenges that we had is when you give a company Africa-wide solution, especially for payments, collections, one of the biggest challenges is one, Forex, and number two, actually repatriation. There are countries that probably I won't mention now where you can actually not get your money out of there. So you can imagine for a startup that is actually trying to provide a solution for a company like KQ that is in more than 20 countries in Africa, how do you get your money back to continue financing your operations? It's some of the challenges that we're seeing. And for me, when I look at things like PAPS, it's a good opportunity for us and asking ourselves, even at individual level, even as banks that are operating here locally, how can you plug into platforms like this to help your SMEs, your individual customers able to power transactions across the continent in real time? Again, Landry in the morning, when he was given the challenge of what's happening to banks now that fintechs look like they're taking over, he rebutted by saying, you know, they're not allowing their legacy technology to hold them back in terms of competing in the fintech space. And this is true because we're seeing a lot of banks now either buying into fintechs, investing into fintechs, or actually even starting their own fintech arms. We've got perfect examples in Kenya, FinServe, Vuma. I know Stanbic is putting up something. Cooperative Bank, and I'm seeing Charles there, who was one of the guys who started Hive at Copbank. Amazing stuff. So the banking industry not being left behind, getting in there, snuggling it out with the fintech industry, at some point partnering well, and a lot of them happening across Africa. Telcos as well, again, not being left behind, creating the payment rails. I would say that this has really supported, especially the remittance business in Africa. From way back, you know, Ding, Sendwave, all these guys who are actually using the mobile money rails to power remittances into Africa. But again, when I look at these numbers, they also give me another story and more questions. So I see MTN has got 50 million customers across Africa, mobile money customers, and M-Pesa has what, 58. So what's the population of Africa? Roughly 1 billion, 1.2 billion. So we are playing at around 10% of the African population. But if you double click on these numbers, what they don't tell you is that not all the 50 million are active customers month on month. So you'll find that probably only 20% of these guys are actually active customers month on month. So we are dealing probably with, what? 10 million to 20 million active customers across Africa on mobile money. Yet we are saying we are leading the conversation on digital financial services. It then tells you that we are barely scratching the surface. So for me, when I look at these numbers, they're good. And I'm not saying the numbers are not good, they're good. But at times we need to double click on those numbers and ask ourselves more questions. Are we actually really heading there? Have we even started? And for me, when I look at this, we still haven't started. If we are to transform the lives of many Africans through mobile financial services, these numbers have to go 3 times, 4 times. And it's the people in this room that need to make that happen. CBDCs as well. I look at it as a good thing and also as a cheeky thing, in a sense. It's a good thing because the central banks are coming around in digital currencies. But also it's a cheeky thing because I think there's an element of control as well. Not wanting to be left out of the conversation, so you say, let me create my own thing that we can control. But all the same, the question is, how can we leverage on the conversation that is already started by the CBDCs? I know the Central Bank of Kenya issued a white paper on CBDCs, shared it out, called out for comments. I don't know how many of us read it. I don't know how many of us gave their submissions. Again, like I mentioned before, are we participating actively in these conversations? So that when they create a framework for CBDCs and then we rise up and say this thing doesn't work for the fintech community. But when they issued the white paper, nobody commented on it. So just a call on us to be active citizens in that aspect. So very quickly on the challenges that we are facing. I know funding, when you look at the numbers, you might say that funding is not a challenge per se. But think about it this way. For those of you who have started startups, I hope that makes sense. started startups or started businesses? I have. When I resigned from Cellulant, I started my own startup. Long story. There's always this phrase, friends, family, and fools. So if you don't have your own cash reserves, you go out to your friends, you go out to family, yeah, and a couple of fools who don't understand what you're doing, but they like you. So they give you some little money to do whatever it is that you want to do. So that has always been the story of the African startup. But when I look at news, when I do, once in probably 6 months, I always see guys advertising plots, I don't know, all those things, and the guys investing in plots and buying. But I'm wondering, it means actually guys have the money, but nobody is willing to invest money in technology. I don't quite get it, because everyone here, like Landry was saying, has a side hustle. But you'd rather buy a plot in Kitengela than give Munyi 100,000 shillings to actually pay for servers to actually host my code. I mean, I don't understand it. And this is the point that we're speaking to here. How can we be able to get local investors interested in technology? Because remember, at the end of the day, when the DFI comes in, the profits will go out. It's the reality. So what if it means a company like Cellulant that I was part of, if it got that $50 million from you guys here, the multiplier effect, either on your investment or the impact they're having in the society today, will be distributed among the people in this room. That's simply what we are talking about. And that's the challenge that we are speaking to here. Growing and retaining talent, we all know. Talent wars and all those things. I mean, Microsoft's, Google, and now I hear Amazon is coming to town, and they're poaching, techies from startups and all the places. It's a challenge that is not going anywhere, because I remember sitting in Exco in Cellulant in 2016 was one of our discussion topics. We were losing talent. But that time, we were losing talent to banks, interestingly. But we didn't mind losing to banks, because we were collaborating with banks. So we used to call it school fees. We are paying school fees for banks. Because when they go on the other side, they understand our language, and then they integrate with us better. So we didn't mind that until Andela came to town. And you're like, what? I was paying this guy 80K. He's been offered 300K. How do you even have that conversation? So, I mean, it's a real challenge. It's not going anywhere. And I think it's about time that companies look at more innovative ways of retaining talent. I know there's always a salary war and all those things, but those of you who are techies, I believe, the value that you derive most in actually seeing these products that you built actually being put out there and actually changing lives. I want to believe that, because that's what I've learned over the many years that I've worked with techies. I'm not one. And I think most companies need to start looking at different ways of how they're able to retain this talent. Need for more understanding of the fintech ecosystem by policymakers. We spoke about it. I'll give you a very quick example. 2012, when you're launching mobile banking with a certain bank X in Kenya, the central bank did not have a policy around mobile banking. Right now, we're talking about cryptocurrency and all these things. Something as basic as mobile banking today, 2012, August, CBK did not have a framework for managing mobile banking. And what they told that bank is, go to Cellulant and let them give you their product document. And that is what they used to give the bank a letter of no objection. That's how far we've come. So, and speaks to what I was talking about, is how can we be able to open up to the regulators to show them what we are doing. So you can imagine there was no policy around mobile banking, but they did not stop the bank from going live once they understood what it is that we are doing. So these conversations really matter. Cyber threats, we all know that. The Mulot guys committee, the central bank governor calls it the Committee Innovation Hub. Those guys that call you and, try to do some social engineering on you. Gaps in digital finance literacy by consumers. You can imagine the conversation about cryptocurrency today. Do your villagers know what crypto is? Yet everybody is saying crypto is the next big thing. So you can imagine the gap in terms of literacy. We don't assume that everybody understands what it is that we are talking about. And of course, inadequate infrastructure, internet. I work from home 100%. My dad is 87 years old. I'd love to spend a lot of time with my dad. The only reason why I can't do that is because my shags doesn't have good internet. Otherwise, I'd be spending 80% of my time there, because I'm working from home anyway. and that's my home. So it's a challenge even for somebody like me being affected by challenges like these on infrastructure. So some of the things that we need to. So what's the role of Africa Fintech Network, very quickly as I summarize, is basically we trying to capacity building. Recently, Ali, our chairman, was trying to train central banks on risk-based lending, which is what most digital lenders are doing, and just trying to get central banks appreciate that. Trying to interface more with regulators, creating a fintech radar, having all this dream where we could have, when you're walking in town and you've got this, what you call window shopping and all these mannequins and whatever it is. So imagine all these mannequins inside those windows are fintech companies where people just come in and see the whole wide sector of the fintech and say, these are the people that we need to work with. And of course, advocacy with government. So quickly, again, a platform that unites Africa fintech leaders and organizations, and also made up of self-regulating fintech association like the Kenya, Africa, the Association of Fintechs in Kenya, FITSPAC in Uganda, and the rest. But also we've got corporate members, of which EcoBank, which is a Pan-African bank, coming to join the Africa Fintech Network and participating as a corporate member. 34 countries already, some at different development stages. But more importantly is the fact that we would like to actually cover all countries in Africa, because this is the beginning of the African conversation. If we can have a space where all African countries through their FinTech Association are having a conversation on how they can overcome some of these challenges, it becomes a very powerful conversation in terms of how we're able to transform and overcome the challenges that we've spoken to. So I will not read all this. I will stop there in the interest of time. I will thank you all for listening to me, and have a productive and exciting 2 days here. Thank you. Thanks. Sure. Yes. Yes, I'll post it. Thank you.
Something about clouds, like the ones they fly through while saving lives at 40,000 feet, and the one that makes it all possible when every moment counts. With VMware Cloud, all your apps benefit from a cloud that gives them flexibility, choice, and speed, wherever your business takes you. VMware, welcome change.
All right, help me appreciate Munyi one more time. All right, if you'd like to access the presentation that he currently shared, you can be able to follow him on LinkedIn. He'll be able to post it there, and then you can interact on the same. Okay, fantastic. So our next topic is going to be on the payment modernization strategy. And to guide us through this particular topic is a lady who is responsible for driving and running the end-to-end management of the business at VMware, while at the same time sharing and executing against VMware's vision and also strategy in the region. All right, she also leads VMware's continued expansion in sub-Saharan Africa and also works with customers to drive innovation across a multi-cloud and increasingly digital landscape. She is a proud mother of 2 twins who are currently 13 years old. We're having a discussion on how we can be able to revisit this conversation 10 years from now so that we can be able to get a suitable partner for them from East Africa. She is currently the Regional Director, Sub-Saharan Africa for VMware. Ladies and gentlemen, help me appreciate Lona Hadia. She comes to the front. Welcome, Lona, and thank you.
Hi, everybody. Always great to be between you and lunch. So super to be on stage. I was actually smiling. I've had a couple of flying conversations with you, but my journey in Africa and with East Africa goes back a while. My first trip to Kenya was in 1999. I was all of brand new at Hewlett-Packard, and I'll never forget it. It was my first presentation as a vendor. And I walked into an audience similar to yourselves, and I thought, oh my goodness, I've walked into the World Economic Forum. and I was absolutely petrified. And it was my first presentation, and I'll never ever forget the warmth and hospitality that was shared with me on that day by the Kenyan audience that was there, and it was a great birthright into the world of Africa. So I'm back, haven't been here for 3 years. Every time I come back, I'm absolutely blown away with the speed at which this region, East Africa, catapults itself forward. And really, if you look at all the conversations that are happening today, it's really about how we're using technology to embrace and effectively catapult this region and embrace innovation in order to take you forward. So the topics, I mean, it was quite interesting. I was on a panel conversation this morning, and I keep hearing the same discussion, which is really around, skills. It's really around complexity. It's really around regulation. It's really around how do we optimize and how do we take advantage of this new world that's ahead of us. I mean, I heard, I mentioned this morning of this incredible opportunity that we have ahead of us. Munia, you were mentioning a number of, fintechs that are registered. I was doing some homework before I arrived here, and I couldn't believe that I think it's over 60 registered fintechs in Kenya alone, over 100 in South Africa, and expanding by the moment. So I think to coin a phrase that was used earlier, if we're not embracing technology in order to propel ourselves forward in any organization, whether it's a financial organization or otherwise, then we're going to be left behind. And that's obvious, especially when we start looking at our kids, right? I mean, you did mention I have 13-year-old twins. Trust me, they terrify me. So the topic I have today is payment modernization, and I'm an old girl, as you can see. And I love to take notes, and all the way through these sessions I had so many reference points, so please forgive my crib notes as I'm going along, because they really are referenced into the content that I wanted to share with you today. Because when you talk about payment modernizations, it's really around modernizing the app, because at the end of the day, the app is central to the user. The way you engage with the user is effectively through the application. It's the first point of contact. And I think if you look at my presentation as I go along through this discussion, our journey with our customers is really how we can help you embrace not only these new modern apps and secure them and provide them to you in a way that you receive them on a single digital platform, but it ties into the legacy. It ties into some of the infrastructure you're still cumbered with. You still carry, because these are really critical, especially in the financial sector, where in many ways the financial sector was the first to come in with technology. And so as a result, how can we as an organization help you combine that legacy with the new world of modern apps in a simplified single digital framework, and at the same time enable you to deliver those in a secure, compliant, easier to manage, clear, visible platform. So it was quite interesting. I mean, the minister, Mr. Jerome Ocheng, mentioned that you needed to focus as a financial institution on customer first, right? And we say the same thing, right? The digital experience that banks need to provide is really around customer first. And those demands of customers today differ. They're not the same customers as you had 5 years ago. Customers demand instant gratification. They want the best access to, internet banking. They want the best access to their personal loan information. They want a customized experience, and they want the best. And in order to differentiate yourself, you really have to do that. Lanre mentioned in his open banking session, the data effectively that we're gathering with these new wonderful tools, with AI, with machine learning, et cetera, that belongs to people. So how do you use that information in order to differentiate your services, but at the same time make sure that that data is protected? It's kind of tight, right? It's a heavy weight to carry if you're a financial institution and you're having to put this forward. For many years, it's the financial institutions more than any who've been entrusted to hold that data and keep that data secure. But at the same time, you've got all these new challenges, all these new offerings, all of these new interfaces in terms of fintechs engaging with your customers. How do you maintain that going forward? At the same time, as I mentioned, legacy impedes digital transformation. Many applications within the financial sector today really, and applications were built on legacy infrastructure, and they're difficult to migrate. We have numbers of clients who are saying, we're going to migrate them to the cloud. 4 years later, they're still sitting inside their data centers. They're carrying incredible bills. They're trying to transform them onto native, and they're still struggling, and it's costing them an absolute fortune. It's not as easy as it sounds. Skills, skills come up a lot. Many people talk about the skills drain in Africa. We're losing those skills. And as we start moving into these new digital environments, how do we make sure that we're encouraging and keeping the skills that we need in order to continue to develop these sexy new applications and still maintain the legacy? It's still critical because it's still relevant. Security and compliance, I've mentioned this, and it's going to come through, but I mean, it's a key element of the discussions today. And at the same time, we need to be able to show time to market. We need to put new services out there, and we need to do this still while maintaining a very heavy burden in terms of our legacy mainframes and our legacy IT infrastructure supporting often our core banking platforms and many other applications that we have. So how can we help you, or what have we been doing? So this is an evolving story. The VMware journey is a journey that has evolved over, many years, I think really starting in 1998, and led to a number of acquisitions. And many of those acquisitions really, over the last couple of years, have really been focused on application modernization. So I'm not going to talk tech today. I've got two worthy colleagues sitting over there who will be hosting a couple of sessions that really talk about security at the edge and around using network security in order to protect your customers' data a little bit later in the specialist sessions at 3:30. But at the end of the day, what I'd like to talk to is the strategy that we're taking in order to assist our customers going forward and really driving a customer-first strategy. So from our side, we have a few considerations in terms of, leveraging technology in order to become a digital-first bank. So, resilience. At the end of the day, how can we enable you to embrace cloud, right? But build in resilience, taking into consideration the real factors that we have in Africa. Munye spoke about his father not being in a place where there was internet, right? Ooh. Did I do that? No, it's over there. You're confusing me. I've got a disco going on here. Well, he's mentioned that, and the reality is we're in Africa, right? We often don't have power. We have infrastructure issues that we have to face. Customers, and I'm going to talk to one specific case study. At the end of the day, public cloud may be suitable for certain applications, but other applications still have to be hosted in a private data center. But then you need to deliver applications to the edge. How can you deliver those applications to the edge if they're sitting in, somewhere where there's not even a remote office or a branch or a kiosk? And how can we make sure that the way we're delivering them is in a way that's secure, consistent, easy to manage, and effectively delivers the most excellent service to the customer at the end of the day? All of this obviously talks to innovation and growth, right? In order to innovate and grow, you've got to deliver these sexy applications at the end, and they've still got to correlate and tie into the back end in order for you to provide that single pane of glass and that single view to the customers. Customer first, delivering exceptional customer experiences. Customers don't take your systems being down very well, right? This is something at the end of the day that's a major, major concern for banks. The moment a bank is in trouble or an application falls over, it's all over the media like there's no tomorrow. There's a direct impact on your customer base. And that lays true with any organization, really, and you're going to see it more and more. I just think that the banks and the financial institutions are the front end of this because they really are on the front end of driving these experiences. Empowering employees. That's another discussion. Customers are not only those who are receiving your services, as end users. Customers are also your employees. We've all gone through the most radical shift in industry over the last few years in terms of COVID. How you as an organization have managed that with your staff is critical, and it would have been critical in terms of the foundation of whether you survived or not. Suddenly overnight we all had to start working from home. We had to deal with the fact that suddenly we had perhaps a workforce who was not mobile, had to become mobile. They had to access the applications from their homes, from wherever they were, from on the road, overnight, and in a secure, consistent manner with no disruption. And more you're finding when you start talking to recruitment companies, when you start talking to HR inside the organization, one of the biggest things that comes forward is that employee experience in terms of their digital experience within the organization is one of the most critical in terms of staff retention and attracting new talent into your business. And of course, preserving customer trust and protecting data. As I said before, this is the crux of it all. I mean, we're now playing with some incredible information. Data provides us with so much opportunity and so much potential to really truly differentiate your services. But Africa is complex, right? Probably one of the most complex out there in the financial services sector when it comes to regulation and compliance, and especially when it's cross-border. I mean, if you think about the financial institutions here, many of them Pan-African, some of them dealing with over, 52 countries in Africa? You know, many of them dealing with 30+ regulatory boards, you know, regulatory compliance requirements, and at the end of the day, each of them very, very, very complex. And I think it was Caroline who referred to the fact that, you know, we can't let regulation throttle us. You can't let regulation hold back your progression in terms of the digital world. So, you know, literally, our response to this is something called a single digital platform. And this is really something that VMware continues to grow from and develop from. And that is really enabling our customers to leverage from both their traditional IT and their modern IT, their traditional applications and their modern applications, and manage them in a single framework. So effectively, no matter whether you're trying to access your applications or your key technology in the public cloud, in your private data center, in a remote office, or perhaps in a far edge type of setup, you have the same feel, look, access, control, and management across the board, all using the same skill set. So at the end of the day, you're not having to re-platform, you're not having to re-engineer, you're not having to re-skill. You're effectively taking the skills and the capabilities that you have in your VMware IP, and you're reutilizing them across the board. By doing this, you're able to deliver agile, faster software releases. You're answering the business requirements. You know, one of the biggest, let's call it, having worked in the financial sector with many of my customers in the past, one of the biggest bottlenecks or one of the biggest pains is shadow IT, right? Business says, you're not delivering fast enough. I found this sexy new solution. I'm going ahead with it. You know, ops turning around and saying, but it's not compliant. You can't deliver this. We're not ready for it. And the business going, how can you not be ready for it? You need to deliver it now. What if we're giving your developers the same environment, the Kubernetes type environment? You can, you know, ramp up, you can spin up, you can play around, you can do everything in a sandboxed environment inside your VMware domain that enables you to deliver a secure, compliant offering that aligns to your management requirements inside the organization. Responding faster. You know, effectively you're responding faster to both customer needs on the internal perspective as well as an external perspective. And as I said, security is then built in from the ground up. Security, management, visibility, control from the ground up, all in one single digital platform. So, where have we done this before? So, you know, I mean, I could have pulled up many stories here, and I'm going to pick on two individual stories. So the first was State Bank of India, and the reason I chose State Bank of India is, I think, similar to the Ministry of ICT discussion that we had earlier. You know, they needed to step up. You know, they needed to provide, what was their goal? Their goal was to become the digital platform for banking services in line with the digital platform that was, or the digital requirements that were being pushed down from a governmental standpoint. They had a vision to bring the entire range of financial products and services to all Indians, very similar to what we're dealing with in Africa, right? You know, fintech, what we're doing, how we're leveraging, you know, to reach the cashless society, to reach our areas where we can't traditionally reach them. And this is a very similar story. And effectively, through partnering with VMware, State Bank of Nigeria managed to lower their IT costs by around 80%. They centralized their IT, they simplified their processes. Now you know this. I mean, this is something that's not new when it comes to VMware and virtualization and the returns. But the real costs and the real impact of this was not only in terms of the IT and the infrastructure and modernizing IT and infrastructure, but it was also around the power side of things. Cooling, the power it took to maintain those environments. And those are other real factors. And I'm going to talk to another story in a minute which really amplifies that from an African standpoint. Through working with VMware, they reduced the app provisioning time from months to days, again, pleasing your users. You know, I did mention on the panel this morning, at one point in my life, I was involved in application lifecycle management. That was like 5-6 years ago. And the big discussion on the table then was DevOps, right? You had your developers creating dev, you know, sexy stuff. And you had the ops guys going, this is my baby, do not break it, you cannot break it, okay? And effectively you had to get the two to collaborate. You know, they had to get together, they had to scrum. Kind of see that as like in the rugby pitch, you know, you all get in there and you a bit of a fight until you get your way. And you find the right answer at the end of the day for what your customers need and what you need as an organization. And that's very much where we are in terms of traditional and modern apps and going into the future. So again, as I said, with State Bank of India, through working and collaborating with us, they really, as I said, reduce that app provisioning time. They improve business continuity. They reduce downtime from just, you know, from days. I mean, they really were struggling in terms of days of downtime to just a few hours per year. And at the same time, and I spoke to this a moment ago, they allowed over 1 million employees to work from home over COVID. And they had a significant uptake in terms of their staff productivity. So it was really, it's quite a phenomenal success story, and I'm happy to share more offline, but that's really some of the key snippets from it. This story is hot off the press, yet to be released. So this is a launchification of the Cellulent story. So you've heard about Cellulent today. I heard a number of individuals who work for, or did work for Cellulent earlier. But I'm very proud to say that we've been working closely with Cellulent through one of our other partners, Pure Infrastructure, who's a VMware Cloud Provider partner, to address a real business case in Africa. This will be released to market fairly shortly, so please don't look at the slide and say, it doesn't look great, because I did this overnight on a plane, and I tried to present it to you in a format that would make the most sense. So Cellulent is a Pan-African Kenyan-based Pan-African fintech. What surprised me with Cellulent when I sort of went through the journey is they deal with 33 regions in Africa. They have 18 locations. They deal with 33 regions, and they came forward to ourselves and Pure Infrastructure and a number of other providers with their problem. And the issue was that their infrastructure was aged. Okay. It was falling over. They weren't able to deliver the services that they need to, so they said, okay, fine, well, what's it going to cost to upgrade this? And it was cost prohibitive. I mean, there was no way they could continue to deliver the services that they needed to deliver and just replace this infrastructure. So they needed to find a solution, which is where we put them in touch with our cloud providers. At the same time, they needed to manage, monitor, scale, have true visibility in terms of how to consume, and they had to provide solutions in areas where there wasn't necessarily a data center. So they needed to take advantage of public cloud, private cloud, where data centers existed, where branches existed, et cetera, and also perhaps where you're at the remote edge, where nothing existed. So effectively, between ourselves and Pure Infrastructure, we, in a nutshell, have been able to provide a solution that allows them to, one, address the compliance and regulatory requirements that they have across these different borders and requirements in order to host data, retain data sovereignty, remember, in the location. I think one of the gentlemen today mentioned that. Spin up data centers and effectively provide a cloud wherever it is needed, but in the most cost-effective manner and in the most secure and compliant way. And I'm really proud to say this will become a new release story in the coming days. So a super African story in terms of in terms of how we're working with, supporting, and collaborating with our partners in order to make that happen. So net, you know, I hope my presentation gives you a good overview of, you know, why VMware. You know, it's not a new story. You know, we come from 1998. You know, we kind of surprised the world and made it sexy to do vMotion, for those of you who know what I talk about, where you could go, whoa, and it would move across the stage and everybody very excited, to today, where we're talking about really providing you with a single digital platform that supports both your legacy and modern apps, delivered in a secure and consistent manner. So, you know, at the same time, we have 20 years of working in the fintech industry. You know, our largest, if I look at Africa and if I look at our customer base, you know, our niche space is the financial industry, and in the telco industry, as well as retail and a number of others. But we really do lead in Africa with the financial space, and I would like to thank our customers for your support in terms of making that happen, and your faith and the collaboration that we see, because we really do take a lot of feedback from our region back into the central teams in order to continue to evolve our solutions around that. I mean, I'm not going to talk about the number of customers that we have and how great we are and how many employees, et cetera, et cetera. I really just want to talk about the collaboration that we have with our customers and how it really differentiates the way we go to market. On a final note, I have some really personal news. So, again, hot off the press. So some really exciting news on the foundation of the success that we have in East Africa, and our growing team here. We're actually opening a formal branch. We've been operating here for quite some time under the umbrella of Dell Technologies. Super excited to say that in July we'll be formally VMware Kenya, which is super exciting. More to follow in official press releases, etc. But I did get the go-ahead that I could release this information to share with everybody today, which is really, it talks to, the tremendous opportunity we see, the growth that we see in the region. I think the journey together and the collaboration and the opportunity together is exponential. So thank you for your support. I hope you enjoyed the sessions today. And yes, please join Marcus and Michael later for a bit more of a technical deep dive in the specialist session. So many thanks for your time, and enjoy lunch.
All right, fantastic. Did you enjoy your lunch? Nice. We're looking forward to the afternoon session, and it's good to have each and every one of you here. To our viewers, welcome back once again. Thank you for your engagement. We know that we can be able to engage with you in the chat rooms for any queries. Just kindly post it there, and then we will be able to engage with each and every one of you. So wherever you are, ladies and gentlemen, please, if you can all be upstanding, no dancing, just stretching. Just stretching. All right? Just stretching. We can all be upstanding. Let's all rise to our feet. So rise to our feet. Just need to make sure that the lunch and the buffet and everything else has gone in well. Let's all be upstanding. Very, very simple thing that I want you to do. So the first thing that I want you to do is just to pump your hands up, all right? You do it with a bit of swag, just pump it up. Pump it up. Today it's a waist thing, all right? So pump it up, and then the second thing that you're going to do, you're going to stretch your left hand, and then your right hand. Okay? Sorry for us, it's okay. Yeah, we'll make sure that, don't worry about that, all right? So you'll stretch your left and your right, then you go to the shoulder, waist, and then we turn to this side, all right? We turn to this side, all right? This side, not that side, this side. I know we are all people of disruption, all right, in our industry. So if you say this, we're like, no, we can invent this side, all right? So you will do to the left, to the right, to the shoulder, to the waist, and then you turn like that, and then to the left, the right, the shoulder, the waist, and then you turn, all right? No, you don't turn that side. You're going round. We're going anti-clockwise, all right? Anti-clockwise. So we'll start with this side, and then we go to this side, and then we go to this side, all right? So just remember, it's the body parts. You'll start with the shoulder. Don't go straight to the waist, all right? So you'll go to the left. So let me see you do it. All right, let's start. Let's go to the left, the shoulder, the waist, and turn to this side, to the left, the right, the shoulder to the waist, and turn ikoniri. All right, so it seems, all right. Guys, listen, let's get it right, all right? So, see if you can be able to move with me, all right? Let's move together. So we start on this side, all right? You want to go clockwise? Okay, let's go clockwise then, all right? It's easier. So we'll start on this side, and then we turn this side. All right, so we turn this side, and then we turn this side, and then we turn this side. What do you rather? Show it, do it to me, show it. Come and, you want us to go? All right. So we'll start like this, and then like this, and then like this, and then like that. All right, fantastic. Okay, that works well. Are you comfortable with that? All right, so we'll start with the pumping, isn't it? Okay, so, Bona Director, give me that music. I was being informed that there's a drone somewhere here. I don't know if it's going to be there. So if you happen to see a drone while we're dancing, just make sure you wave at it. All right, let's do it quickly. Mr. Director, if you can give me the music so that we can start. So I should be facing on this side, isn't it? So that we can go together. All right, just move your feet. Pole too. Then you pump it up. Pump it up. Pump your hands up. And make sure your waist is moving, all right? Remember, we're starting with the left hand. To the left. The waist, and turn ikonini to the left. The right. The shoulder to the waist, and turn ikonini to the left. The right. The shoulder to the waist, and turn ikonini to the left. The right, the shoulder to the waist, and turn. Hold it there, point your shoe and up. Shoe and up, point your shoe and up. Shoe and up, point your shoe and up. Shoe and up, all right? Just wave at the drone, everyone. Wave at the drone. Thank you so much, ladies and gentlemen. You may have your seats. Asante sana. Santeni sana. All right. So we want to get into the next session in the interest of time. And now we want to discuss about, is embedded finance driving banking as a service uptake? And to take us through this particular session is a man who is leading an advisory firm in developing, launching, and operating impactful innovation ventures in MENA and beyond. He was a senior advisor to Forbes Middle East, which is a licensed edition of Forbes Media, a global media company with a focus on news and information about business, investing, technology, entrepreneurship, leadership, and affluent lifestyles. This is a gentleman who is actually well-versed with this particular topic, and I am proud to just know him. Humble gentleman, well-versed, and very intelligent when it comes to this particular discussion. He is the founder and CEO for Next Arabia. Ladies and gentlemen, help me appreciate with a warm round of applause Ahmed Abdul Wahab as he comes to the front. Thank you, Ahmed.
I hope everybody's doing well. My name is Ahmed Abdul Wahab, and I'm the CEO of Next Arabia, as mentioned, a boutique innovation advisory firm helping big corporates and government entities to launch and manage innovative new ventures. The topic of today is embedded finance driving banking as a service? So as more and more companies are offering financial services in their offering, such as opening bank accounts, wallets, payment, loans, savings, etc. As more of these companies and ecosystem embed financial services into their offering, banks should use this opportunity to figure out what is their role in this new model. In this session, we're going to unbundle what embedded finance and banking as a service is, and we're going to talk as well about the impact. But first, I want to start with you, audience. I have 4 quick questions for you. How many of you know what embedded finance is? Raise your hand. Okay. How many of you know what banking as a service is? All right. How many of you believe that embedded finance is actually driving banking as a service? That's good. And what about how many of you believe that embedded finance is not driving banking as a service? Okay. So at the end of the session, I will ask the last 2 questions again to see whether you had a change of heart on that topic. So please help me to welcome my panelists. But before we start, just some logistics about the session. It's going to be a 30-minute session, and it will be interactive. So I want you to really ask questions, not at the end of the session, but rather in the beginning in the beginning of the session and the middle of the session. So not just at the end. Whenever you have a question, just raise your hand. And when you do so, do 3 things. Number 1, state your name. Number 2, your company. And the most important, your short and simple question. Not a comment or statement, short and simple question. Okay? Are you ready? I can hear you. Are you ready? Yes. I can hear you. Are you ready? Yes. All right. Now you're ready. Please help me to welcome our panelists. Sahil he's the CIO of Gulf Arab Bank. Please give him a big hand. Hilda, she's the CEO of Pesesha. Please help me to welcome her. And Mr. Kamal, he's the CEO of Little Cap Services, one of the key sponsors of the event. And last but not least, we have online is Mr. Omaru. He is the CEO of AI Colors. Hello, Dr. Omaru. Are you with us? Are you with us?
I can hear you. Thank you. Thank you for having me.
Excellent.
Can you hear me all right?
Okay, excellent. We can hear you. Thank you very much. Please sit down. So we're going to start with Hilda first. Otherwise, I would have problems with my wife. So ladies first. Hilda, if you could briefly introduce yourself and give us your take what embedded finance is. And then later on, we're going to talk about banking as a service. And then we're going to try to merge both together. But let's stay first about embedded finance. But just introduce yourself, your company, and your stake in embedded finance.
Thank
you. Thank you very much. Yeah, glad to be here, to talk about, what I believe is going to be the future of fintech, that's embedded finance. And before I talk about what embedded finance means in my world or Pesesha's world, just introducing myself, Hilda Mora. I'm the CEO and founder of Pesesha. So Pesesha means financial enabler in Swahili. Mm-hmm. So Pesa and Zesha. Zesha means enable, Pesa means money. And that's exactly what we do. We provide financial enabler infrastructure to enable small businesses to be financially included. And so we've been doing this for the last 5 years, evolving this infrastructure, which we are now calling the embedded finance infrastructure, which takes a lot of time, work and effort. It's a lot of hard things on the line. And I must say that building an embedded finance business is hard. I need to start there before I talk about what it is. So what is embedded finance and what exactly do we do at Pesesha? So embedded finance in our world is where we bring, financial services, to the underserved, businesses or people who will not be able to access credit, and combine it or integrate it in the non-financial world. Mm-hmm. I'm really trying as much as possible not to use technical words.
Excellent.
Because I'm a techie, so I can get very technical to what that really means with APIs and all these things, but I'm trying as much as possible not to confuse the audience and assume that everyone is coming from a developer background. So just to summarize, it's really integrating financial services with non-financial services, infrastructures mm-hmm. or processes. And now I'll go to what we do at Pesesha. So what we do is we've built a lending infrastructure that allows us to, now connect those financial services with non-financial businesses. And really what that means is we've built an infrastructure that allows us to do that very seamlessly without changing how the current workflows of the non-financial services work or non-financial organization work. Mm-hmm. So I'll give an example. One of our biggest partners is Twiga Foods, who I'm very sure almost all of us in the room know them. How many of us don't know Twiga Foods? Okay, so we all know.
Probably in the wrong room if somebody would raise their hand.
Exactly. We know them for bananas. And so basically what we do with Twiga is we fully integrated our services and our infrastructure with Twiga. And a merchant or a vendor for Twiga, instead of going to Marikiti at 4 a.m., the only thing they need to do is to go to the Twiga app and select that they want to buy the crates of bananas through credit as a mode of payment. And at the point of sale, when they choose credit, they are speaking to Pesesha. So we facilitate that credit and immediately credit score them real time with all the data we have about them, including the data from Twiga and how they've been transacting with them. And then we're able to give them a credit score, a loan to we buy the products for them. And then the following day in the morning at 4 a.m., Twiga delivers the crates of banana. It can't get that easier in terms of how the current world should be in enabling that small retailer with access to credit.
That's amazing, and I have several follow-up questions, but we're going to do it later on. Specifically, as actually banks started with it a long time ago, and then somehow they became bank. I will not ask you if you're going to become a bank now, but I'm going to ask you later on. Kamal, if you could briefly introduce yourself and as well a little. Everybody knows little, but if you could explain it from an embedded finance perspective, yeah, it would be good.
Okay, good afternoon.
Good afternoon.
So my name is Kamal, and as I was introduced, I'm from Little Cab. So there are certain things I want to introduce me in a different way. So we started as Little Cab, but we are no longer Little Cab. We are Little App. When we started Little, the domain was little.co.ke because we were operating here. Then when we expanded, the domain became little.africa. We further expanded and now it has become little.global because we also now started operating in Asia. The day I think we were taken to Mars, maybe we will do little.universe, but as we speak, we are little.global. Little started as a ride-hailing app, but now we have close to 27 to 30 different services. You can order food and deliveries and groceries and entertainment and health and payments, and every single thing is inside there. Now, when you put up all those things and integrate to finance, I think somewhere down the line we are talking about embedded finance. And as the discussion goes, obviously I'll give my views and my ways of thinking how the embedded finance should be. But for now, it's little, not little cab. Thank you.
Excellent. Sahil, if you could briefly introduce yourself and as well your understanding of embedded finance. Banking as a service you're going to talk about later on, but what is your take on it?
Thank you. Good afternoon once again. My name is Sahil Arya. I'm CIO and Head of the Banking Technology and Digital Transformation at Gulf African Bank. Quite a good topic. Embedded finance, actually, it has been for a while. There are many, banking services when you provide through different platforms. And especially on the digital space, you have like mobile banking, internet banking. And whenever the customer you have to maintain, they want to utilize their bank account to pay for those services. Whether it could be not little cab, paying to the little cab, or taking a financial loans or anything extra. Those they used to come to the banking facilities, whether it is a branch or whatever. Yeah. Nowadays the things has changed. Like Desha, what they are saying, they are targeting the Twiga food, and the farmer can, whenever they need to have financial services or credit, they've targeted, they go to that platform and they seek for the credit. What we do as a bank, saying bank is core businesses, financing, and saving product. Those are the core businesses of the bank, and we partner with them to provide those financing facilities through this platform. So we do our own business, but in addition to that, we also partnered with other fintechs and service providers where our services can be, made available to the customer in this channel. This is what embedded finance is. When you talk about utilities payment through the bank app, when you go to your banking app, or whatever the bank you are, and you're doing the banking utilities, those are called like a platform banking, where you're partnering with that. But any non-financial, like Pezesha or Little, or recently we launched Halal Pesa as well. We are not, credit facility to Sharia, the person who is looking for the Sharia compliant financing. Yeah. We partnered with Safaricom and we are providing finance whose customer are looking for a credit, providing for finance. Embedding, there is a non-financial, there is a financial, we are combining together, and that's how we are providing banking services to them.
Yeah, with model in a simple way, I don't want to call it back end, but they are your front end, you become the back end, which is having this discussion 20 years ago. Front end, not in the back end. We're going to talk about more detail how it actually works and how specific bank deals with it. If you could briefly introduce yourself and give us a quick download about of your company, specialized in cybersecurity and artificial intelligence, and what's your take when it comes to embedded finance?
Thank you, Ahmed. It's great to be here. I wish I could be there in person, but it's great that we can have technology to connect us. So I'm Omaru Maruatuna. I'm the CEO and founder of Iculus. Iculus, like Pezesha, is a 5-year-old company. We Australia, but are now headquartered in Singapore. What iCulas specializes is we have a product. This is an API product. What our product does is it monitors inbound API traffic to detect security threats. What really attracts us to the world of embedded fintech at large is that, fintech typically has, what we classify as, high volume, high frequency, high value API traffic, which means that, in terms of monitoring APIs for security and for fraud, that's the best place to start. So we've been in the fintech space, since the company started, to a point where in 2020, we partnered with the government department in Singapore to help identify some frameworks around API security monitoring. At the end of our work, at the end of that partnership, Singapore produced what I believe to be the very first API security monitoring guidelines. And so we're proud to have been a contributor to that work. We've been embedded in the fintech space for that long. So our relevance in embedded finance is that somebody mentioned APIs, right? And that the technological landscape now is that we're working with components that are developed by different providers, and these components connect through APIs, and they communicate with the end user through. So API security has become more important, I think, than ever before, particularly in the financial space. So, that's our relevance, and like everybody else, hopefully I can get to talk about the domain, what we're seeing, bring some good contrasts to what you see in Kenya, but also in the rest of Africa. Our style is this part of the world, and so most of our insights will be from this. But obviously, Africa is a very important part of our business. So there's many connections there. But as Ahmed,
excellent, wonderful. Let's talk about banking. Hilda, if I listen to you clearly, what you're actually providing is banking as a service, isn't it?
I don't know whether to say yes, because and we're not a bank, and we don't want to become a bank. You'll say in your world, providing, digital banking, and providing services, services to people who've not, but doing it in a way that allows us to open up our infrastructure to the rest of the world, to integrate, different value adds or offerings as well into it. So, open banking, I don't want to introduce new terms because then you will have to explain to people what open banking is. Yeah. But I mean, essentially, what we are doing for us is, providing, financial services, to different companies that won't be able to do it themselves. One, they don't have the infrastructure to do that. Our infrastructure, which, as I said, we've built this for the last 5 years to be where it is, and now we can be able to integrate with these institutions that are actually now to, bring the aspect of players and the bank, basically, especially for the underserved SMEs or the underserved consumers. And so the way we do it is then we partner with and then or to their partners.
Or
No. In value chain partners.
Okay.
So supply chain institutions, anyone who's working with a small, supply chain, what do you call them, mamambogas, if I would call them, anyone who has a network of those people, the informal businesses, where are they going? They cannot be able to access it from banks. And so they come in and tap into this infrastructure, which allows them with choice, convenience, and at the same time, the ability, to grow because they now have access to credit for the first time.
Excellent. And then if I just go a little bit more detailed, and that means you're not just providing the infrastructure, but you're also providing as well the service itself, the money.
Absolutely.
So what it means is in the older days, when we need to go to a bank, we don't have to go anymore to a bank. So you become a bank.
I will accept that.
I was doing a presentation a couple months ago talking about bank has the future, but banking is the future. Is that correct?
Fully agree.
Excellent. Come on, what when it comes to banking as a service, and are you actually providing banking as a service?
So if you look at it, as you said, banks may not have a future, but banking has a future. And it's I think that is making up the banking. So if you look at it, I think anything... I'm very nervous, I know.
Oh, that's okay.
I think anything that we do today, all the way from the time we wake up in the morning to the time we go back to bed at night, everything that we are doing is exchange of certain things between us. And in that exchange, finance is so embedded because it's a token of transfer that allows us to get those services. And the finance has become just the way, Stanchar and rewiring the DNA in banking. The finance, actually, the DNA of finance is actually changing. So let me give you an example. We have close to about 100,000 drivers that are providing the services. So when you order a little cab, driver around you, we pick it up and he gives you the service. Now when he gives you the service, against his services, he is supposed to get some money. Now if this is a corporate ride, if a corporate is taking that service or he is paying through a credit or a debit card where he doesn't get the money gets into his wallet. Now once the money gets into his wallet, he needs to withdraw that money. Now it has become so difficult for us to the driver and says, now the money is there, go to a bank, go to M-Pesa, go to that. It becomes extremely difficult for us. So we need to embed financial services in the app itself. So today when a little driver picks you up, he has access to his money like this. The money can be in his wallet, transfer that money somewhere. So much so, and this product is really picked up for us, is what these drivers are saying that I take a ride, 100 or 50 shilling or shilling of that 1,000 shilling ride, put it on my savings account. So all that happens so seamlessly inside the app. The driver doesn't know the terminology called embedded, but he is actually using embedded financial services. And behind all that, we are providing banking as a service because everything at the end is banking. So as much as, as she said, she doesn't want to become a bank, to become a bank.
Excellent. Thank you for saying it. She also said it directly.
Maybe she's worried about the regulators.
Regulations.
but so as we get, what the services that we are offering are more or less a part of the banking services that we offer. So we want to become a bank at some point, but it would be a virtual bank, it would be a bank that has completely written the DNA in banking. But that's the plan. I think every one of us is doing banking. It's just that they don't have a banking license.
Sahil, it's automatic. What is your take? In the good old days, the competitor were the other banks. But today, who are you actually a competitor?
That's right, actually, and that is where the banking as a service is coming out. Like the way Hilda or Kamal has mentioned about it, offered through a non-financial, banking institutions. This is where we have to be also up to the game, right? So what we do is we partner, we collaborate, and those guys, of course, where you don't credit some services. This is where banking come into picture. Regulated, we have the where we can provide the financing. So those things, banking as a service, bank are able to provide. What they gain from this, of course, there's additional stream of revenue which comes from their main is coming from the other side. We collaborate with such companies. The second thing is we also understand the insight of customers, like what the customer needs. So that is what helps us to improve our services as well. So we can retain our customers and we can provide services through our platform as well. So they can be engaged and retained.
On that. What you're saying is that banks need and are significantly transforming. Where in the older days, the bank was in just one player of the ecosystem. Not only that, it might become just a minor because it's more into creating ecosystems, like what both of the speakers was mentioning it. Both of them are creating ecosystems, right? Where the bank is not anymore in the middle, but the customer is in the middle. So how your bank, but overall, how can banks do and everything that banks have? So how can transition into this new model that is happening?
As you know, customer is the center of everything. Yeah, and today's the need of customer is evolving. For example, I was just checking out a cinema tickets, okay, and there was a way where you can, if you don't have money at that point of time, something called BNPL is there. You can take it, but there's something added on top of it that is called later. So that is another, which is also part of embedded finance as well. So what is happening is these customers, they wanted to utilize, the financing services at that point of time to consume that particular, in this case, the ticket I'm buying. So the same thing, it can be utilized. If somebody who doesn't have a bank account or who doesn't have the funding that point of time, they can utilize that credit facility. That's how it can be facilitated. So that is what I wanted to say.
I would like to get Omaro in. Omaro, are you with us?
Yes. I'm here.
Very good. So, talking about the old-fashioned ecosystem to the new-fashioned ecosystem, that banks become more, let's say, a player rather than take when it comes to banking as a service. What's your take, and what kind of recommendations would you have for entrepreneurs that want to enter into the segment? What kind of advice would you have?
Yeah, look, I think just listening to Sahil, right? I think the one thing he says that I totally, the customer has become the center. I think regulation has mixed up the game. He'll just open bank, which, the more you different regions, starting with EU, they were the first to introduce open banking, where the idea was to open up the banking infrastructure such that the banks no longer control the data, the infrastructure, and the services. I think what Sahil said about the customer, we're seeing now a creativity, I guess, guided industry where if you've got a unique product, a product that the masses need, they're going to go for it. And now that the bank is no longer the core part of that infrastructure, they slowly, some people call it disruption, others call it revolution, but they slowly, the power is diminishing, and we're seeing new players come. Recommendations. I think one of the facts that speak volumes is right now the statistics between the unbanked and the people with mobile devices. There are now many more people with mobile phone devices than there are people with formal bank accounts. And what that means for small companies, innovative companies is, obviously there is that market of people who don't have the legacy of an institutional bank behind them, and therefore if you were to set up a new banking model, those are the people you'd start with, because they have a less chance of moving to the formal. I think there's a lot of opportunities, but at the same time, I don't think the advantage that banks have now or have had for a long time, I don't think it'll be easy. It'll just easily dissolve. It's going to take a lot of totally say that the banks are irrelevant. They still very much are relevant.
Today,
yeah.
Excellent. We have to go. Just briefly, please, if you could, each one of you give your take on what's the future. What's the future of bank as a service? Is a key driver of banking. How do you see the future of banking as a service?
I think every company eventually will, whether they like it or not, mainly because of the nature of embedded finance, which has transformed and brought the new wave of revenue streams that people never had before. When we embed and integrate with the supply chain partners, they are also making money out of that integration, right? So we provide credit, we make interest income, and we are able to share that as well with them. So starting to see, at least in our space, most of these partners that we're working with, even when they're not fintechs, they basically embraced fintechs into their business model, because again, CG business has very small margins. And so how else do you grow to your other revenue streams? Embedded finance. So the future is going to be every company. And so what that means is look for revenue streams. They will, consolidate. We're going to start to see more consolidations. Maybe between banks and fintechs, which we have seen some banks actually start a fintech arm within the bank, which integrate and work together to build solutions. And then lastly, I think for the other, just consumer, I think it's going to become, we're not going to be the ones to decide, it's the consumer to decide. And so if the consumer is going to decide and looking for choice and convenience, then it's going to end up being, every company has to think about that. It's definitely going to be these consolidations.
Excellent. I love the way Hilda said everybody will become a fintech company. It also happened to me that the bug hit me, so a fintech, we did not even know that this is a fintech until somebody called us, oh, you are, what are we? Fintech. So, they're providing advanced salary for employees. So you said it, everybody will be a fintech, or not.
Sorry, just to conclude. So what does that mean, at least for us as Pesesha?
The organizers will, they hate.
Yes. But we've built the rails and the infrastructure. So come and build it on top of us. Why do you need to rebuild it and reinvent the wheel? So we've built the rails, come and be the fintech that you want to be.
Excellent. Kamal, how do you see the future?
The future, I think, looks like all the banks will have to become provider. Service provider will not just providing the money services, but also every other services that brings in the customer, because as he said, I think the customer is at the center.
Yeah. Excellent. Sahil, how do you see your own future?
I think I'm not afraid. As you said, banking is going to stay, not the bank. Okay, another thing is this customer has a win-win for customer. Whether motor, bank, or whatever you say in that case. But ultimately, even these fintechs or any other non-financial institutions who are serving the customer, ultimately customer who is winning, they are getting the service at a cost which is what they want at the point of time itself they are getting it. Yeah. So that is where the whole thing comes up. So in future, I think this is going to happen because bank also has to collaborate and itself as a business as well.
Omaru, what's the future?
Thank you. Yeah, look, I think I agree with Hilda, but I would say every company would have to be a tech company, right? But I also agree with Kamal that it's a win for the customer. It's a win for liberating small businesses, innovative businesses. I think that's what the future. And obviously, security is becoming more and more paramount. I mean, right now, what could easily undermine a successful infrastructure is a security breach. So I love that there's choice for the customer, and then for us, our relevance keeps getting more and more enhanced.
Excellent. So just to conclude, want to conclude the same as the way I started, asking you a very quick question: how many of embedded finance is? All right. How many of you know now what banking as a service is? Excellent. And how many believe that embedded finance is driving banking as a service? All right. And the last one, how many of you don't believe that embedded finance is driving banking as a service? Excellent. Thank you very much. Hope you enjoyed the session. Thank you.
As you know, 1991, and it started as one of the early tech companies in this market. We are Warandi, Centric, and IBM, and we do that in our office. At least that helps to give our clients time support and process once systems fail.
It touches in both in the private and public sector.
We are fortunate enough as a Kenyan-based company to be sitting in the hub of technology in Eastern Africa.
I think the future is there. The main thing is for the company to keep training people and updating technology development, and to help and associating with all our local companies and foreign companies working here so that we are at par with other countries.
All right, I'll just read. I'll say it, if you do not have little audio phone, you can be able to download it. Make sure you can put in the promo code CIO in caps and DX5. The DX will be in lowercase, and for any ride that you're going to get today, discount of 280 Kenya shillings. Thank you so much, Ahmed. Thank you, Sahil. Thank you, Kamal. Thank you, and also Omar for joining us online. And Hilda, thank you so much for that informative session. Help me appreciate that one more time. Round of applause. Right. Okay, so we have a discussion that we want to get into, and this is rewiring the bank DNA. And to take us through this particular session, he is a financial services executive with banking and management expertise in various countries, strategic engagement in the financial sector systems, exploring alternative business models, leveraging e-value networks, reprocessing, internet banking, and core banking platforms. He has a proven track record in his career that demonstrates in finance. This is a man who has also held senior executive positions all the way from Citibank to Standard Chartered Bank and Standard Ventures by Standard Chartered. This is none other than a well-seasoned man with poise and class. This is none other and Kennedy Mubita. Help me appreciate Kennedy as he comes to the front to guide us through this. That's how we are going to rewire this.
Didn't come up because I think after that kind of introduction, it's been about 3 years since I stopped that. I was the managing director for banking at Standard Chartered Bank for about 7 years. And before that, I was with Citi, and I've done quite a few roles. And so, to what was banking, and Kamal basically talked about rewiring, and so did Hilda. And interestingly, because of the field I've decided to go into, I basically have actually met them and a few other people. So everybody referred to rewiring the DNA in banking, and then we're asking, what is rewiring the DNA in banking? And Chartered Bank, we did ask ourselves, you know, what do customers really want from a bank? And I guess whenever we refer to banks, we have a very static view of what the bank is. But I just want to put it to you that banks are also evolving. So whenever you mention bank, experiencing technology, and we're seeing technology applications in different industries, and we're feeling the impact of that. In terms of, you know, some customers don't find a previous service we used to have as relevant as it used to be. Some new players are coming, like Little, who knew that a taxi cab could be a bank. You know, we have sort of economy that would have, or that we actually had ignored because we're quite comfortable in our space. So just let's hope my technology doesn't fail me right now. I'm trying to move this. Yes, that's it. This is actually a slide, you know, because we asked ourselves critical questions in terms of what do the customers want, and how can we be relevant, and how do we continue to be relevant, and what are advantages do we bring to the marketplace such that we have a competitive advantage versus those who want to come into the industry. Should we be a VC company? Should we give up on banking and just start investing in fintechs, because that is the future? Should we help our clients digitalize so that whatever industry, they discover their own financial journey and create it and build it for themselves? Or should we just build totally new? Our view at Standard, it's all of these things. Because life is an evolution, society is an evolution. And you cannot exactly, I think sometimes it's unfair to ask my colleague from the banking sector and say, what are you going to be? I think, you know, it's like any of you asking your child when they are grown and say, how tall are you going to be? How fat will you be when you grow up? You know, what you can do to influence that process is to say you need to eat healthy, you need to exercise, you need to do all the right things, you need to keep up, stay away from unhealthy drugs so that you can be what you need to be, and then the rest will leave to opportunity and happenstance. So basically, we formed SC Ventures, which I manage for Africa. We don't actually use titles. It's a very painful point when I go into meetings with MDs and CEOs flashing their cards. And we've actually told us cards, give my card with my name and visit. Because our institution basically believes that, you know, what you do speak for you. You should become your own brand. You should not rely on a chart to gain relevance. Your relevance should be what do you bring to the table. And so we have a very flat structure, you know. None of the people hired report to me for management and we do that. So we have an the unit basically focuses on
what we know. What have been our experiences with our clients? And where have we seen changes in behavior or dissatisfaction in service? So I run a lab where we actually do what we call co-creation with clients. And then we also use our staff as a source of information and where mountain we should climb. So we call these entrepreneurs. So basically, any employee who has a bright idea, to organize the process, we actually issue what we call challenges within the bank. So we say, this is a good problem to solve, and this is a good problem that we need to solve, and how are we going to solve it? We don't end result, we start with the problem. And then we see who are the players in this space. And the solution is outside ourselves. So the solutions could be with an entity like Possession, since I've just seen Hilda after a long time. Or the solution could be with Graph Silicon. Or it could be with Cellular. Or it could be with any other party in the market. I'm using names that I'm just seeing right now. Not that there's any transaction going on. There is that. But we see who is giving us a solution that could help us to market, who is nearer to the customer and we can adapt and cooperate with. And so we work from there. From that process, sometimes we find players that are very interesting solutions, a solution that's not only good for ourselves. And so then the next phase that we do then is we look at portfolio. I'll talk about public ones. There are quite a few which are still in the kitchen, but then we have a few public ones, like we've invested in Instabase, we've invested in Silent8, we've invested in Assembly Payments globally, and there are quite a few companies that we've invested in globally. And I'm happy that we've actually, the market value portfolio, current situation globally, is still higher than the we've invested in these entities. We also look at, and for the African continent, of course, we started 1 year after we launched in Singapore, so I was the first unit to open outside. And some of you may actually have met me before, and off the scene for about a year. I wasn't sleeping. I introduced myself to the world, and I needed now to get busy and build something tangible. So that's how we identify the fintechs that we deal with, and then we invest in. Now, there are some problems that we come across that we feel that we cannot find a fit for this fintech, or we can't adapt our internal processes in order to meet that industry need. So in that case, we then start new ventures. One venture that we have announced, you might have seen it in the press, is our B2B marketplace, which we have launched in Kenya. We have actually got a CEO across Africa. We've got quite a few entities. We have another 3 or 4 ventures we were likely to announce by the end of the year. These are totally new entities that will have a board structure, their own CEOs, and deploy technology and use lean startup methodology. So when I've heard comments like, will banks become fintechs? Yes, in that regard we do, and some of them are not licensed or don't need a kind of license. So let me see the next slide that I would see. It's kind of small. I'll hope I can see from here. Otherwise, I will memory. When starting a fintech, a lot of what we've come across as we've been meeting quite a few fintechs is some of them are, sometimes people see them as a get-rich-quick methodology in terms of, we've heard that, some Nigerian guys were in a garage and then they started a payment company and then they got $40–50 billion from a foreign investor. Maybe I can use that as a route to get money. And so you're looking for a quick reach methodology, or they tried to just set up a new lending platform that doesn't really understand the industry and get into greater detail. So you have these lending platforms, and then because around those platforms is not well designed, you find that it's very expensive, because if you've not curated taking capabilities, you will have to cover up that risk by price. But then at the end of the day, then you don't give the credit to the people that need them, because the guys who are paying are actually paying for the poor from the others. And then I've heard a lot of times people talk about, we've got a great idea, but compliance. We've got a great idea, but regulations. And we believe that as an institution that has traditionally been, from a banking side, regulated, there is a purpose for regulation. The regulation is there to protect society. And if you don't into your product, which you are digitizing, then those controls, then your product is not complete, because then you will not be able challenges comes across some challenges. So you need to embed risk mitigation into your product, and that is what I think we believe. So the fintechs that we have met and are working with, we've actually worked with in terms of, what is your approach to risk? Risk should be avoided. Risk should be managed and designed into the product set. And so one of the areas that we provide support to fintechs, and I've spoken to quite a few. Some have worked for a while and went away. Others have come back to us. We believe that where, for instance, not had an agreement on managing their platforms and managing the risk profile, that at least they have learned or been able to take a cue from some of the issues we've pointed out in terms of how does it support their product fee. And then there's also the implementation methodology. Sometimes not enough in designing and making the product fit for purpose. In terms of time, in case I roll over, using an agile methodology, one of the advantages that the fintechs have is the ability to start on a small scale. If you're running a $10 billion portfolio or $50 billion portfolio, it's very, very difficult to just your entire processes immediately, because you're risking so much capital. That's about $1 million or $500,000. You can afford to take some risk, and therefore you can afford to try and test your product. And you should use the opportunity at the beginning to really achieve and identify product market fit. And some of the fintechs that we have met have not really spent time in identifying product market fit, and are really looking at design the product, identify a problem, and scale. And that really does make fintech sometimes not investable. And you might know that, everybody knows about the 10% of fintech, but very few people know the 90% of the fintechs that start and fail because of inability to achieve product market fit, to test it, and to see whether people can actually pay for the product. And so our approach, therefore, if I'm going to, because I've got about 15 minutes, I don't know how much time I have left. Our process, therefore, is to use as a bank, my earlier slide, to identify customer challenges. We have been servicing them. Identify fintechs that are in this and see how we can collaborate with them. Invest in those fintechs solving a real problem, and have looking at solving, addressing the compliance risks and the operational risk around that particular product. And then eventually building new ventures that I'm sure that we will be announcing across Africa over the next few years. So I think I'll leave. I've got about 5 minutes left, so I will. I'll be open to questions if anybody wants to ask a question in terms of rewiring. Are we very articulate, or not saying anything at all? Okay, then I'll just round. If you see there in terms of where, I'll just reiterate them. You know, fintech. So do not get into it if you don't think you have the energy and you have the desire to spend a lot of time refining your product for the market. You know, ideas, you know, are just the first step, but they're complex. Every time you have an idea, when you start implementing it, it becomes extremely more complex. Design risk and controls into your processes, and then do a lot of product testing to make sure that there's a product market fit. And then exhaust sweat capital. I don't think I've spoken to this issue a lot or earlier, but a lot of fintechs that are starting that have not yet established product market fit want to go to market or want to raise capital or come to me and say, can you please fund this particular idea? In this market, where a large company sees a great idea, sees that you've exhausted the value that you could have built, and take the idea cheaply. And then they're able then to scale it. There have been quite a few complaints around that in terms of, I had an idea, I presented it to this VC, and then they then either they didn't build it or they just took the idea and built it. Use your sweat capital usefully, because we know capital are London, New York, San Francisco, etc. And that's where a lot of capital is. And that capital is hungry for opportunities. And if you have a that solves a major society, then don't be in a hurry to sell that idea. Invest in it. Put your sweat capital in it until you're sure you've optimized the value that you can achieve. And therefore, you only ask for external capital when you actually need it. You'll have optimized your idea. You have gained, also learned a lot from it, and make it get a better premium for your price. So.
Fantastic. Help me appreciate Kennedy one more time. Sana, we appreciate you. Thank you so much for your insight and for your wisdom. So we want to go now into a panel discussion where we are going to discuss payment transformation versus digital transformation. This is quite a loaded panel. We've got executive heads like Tim from Safaricom, legendary CIOs like Steve Jenga, who are going to be here. And at this particular point, I'd like to just welcome and invite our moderator for that particular discussion. He is an entrepreneur with over 18 years experience in the technology industry. He is also instrumental in the setup and operations of some of the region's inaugural and most visible mobile value-added services. This gentleman has also held key positions, and he possesses unique that marries technology to the marketplace. He is currently the director at Sure Corporation, quite a lot on the social media pages, LinkedIn, and we totally appreciate the wealth of wisdom he is able to share. Ladies and gentlemen, for our moderator, none other than Mbuku. Makofi tafadhali.
still use my voice. Advantages of school, when you're told to stand somewhere and shout at students, you develop that ability to send your voice out. As you've been told, my name is Mbogo Njehia. Currently, the truth is, after all Ian has said, the best, right? We've seen what's happened to the prices of fuel. Easy in another. You'll be choosing whether to fuel your car or drink water or some other form of sustenance. To add value to your lives. So today, half the time after lunch, especially if you the corporate Kaplan, you just check out. The evening has started early, so it's great to see you guys here. And for a minute of panelists discuss and digital transformation. And really the question is, which way is best? Is there one? Maybe not. What's going to be your unique? What's going to be your core pillar as you look at the different opportunities within the continent? So joining me on stage will be Anga, who lead fintech and enablers at Master. Annie, if you could please join me. Guys, help me welcome Annie on stage, please. And George Murage, CTO at Cellular. Join me on stage, please. Tim Theuri, who's the Executive Head, Cybersecurity at South Africa. And last but not least, we'll have Stephen Jenga, Group CIO, Payments for. Excellent. Let me start on this side. I have a preference for looking at my thing for craning your neck. You think about doesn't look good on camera, and it's better this way. But I think we'll start with Annie. No, I mean just because I chose you, right? Sometimes just is good enough. So I mean, at Mastercard, you sit at this really great intersection of everything. So to you is, how do you see all your different publics kind of like thinking through this digital transformation versus transformation sort of conundrum?
Yeah, so I'll say that I'm seeing a lot of collaboration. Mm-hmm. So we'll find banks are collaborating with telcos, they're collaborating with fintechs. They're also looking to reach a lot of new markets to remain competitive, because they wouldn't be able to reach those market segments by themselves. Yes. So if you think about the gig economy, if you think about the underserved, the unbanked, and then they're definitely looking to build products together. Okay. Yeah? So that's what I'm saying.
What's your difference thinking transformation versus payment transformation?
So digital transformation is when you think about business, your core proposition to your customers, and you're going to make that all digitally native. And so I would give an example of things like digital KYC, so you don't have to go to banking hall to actually get all your documents like you used to do before in the olden days. And then payments transformation is where we're trying to see to understand how do we make both and merchants either start paying digitally or starting payments digitally. So this is where you'll see tap on phone. So I'm sure you've seen all the. I get very excited. I go to a supermarket and guys tapping on the POS. You see contactless. Yeah. So those are the different differentiators that we